All right, yo, what's up for y'all watching this on the YouTube replay? Hope you're having a good Sunday, good morning. And for y'all watching this on the YouTube replay, I'm actually going to be doing another stream around 8 p.m. Currently for me, it's 11:40 p.m. So basically in exactly 8 hours from now, I'm going to be streaming another stream tonight. So this is our first stream of the day. I'll give you a quick portfolio update. Then we'll look into some of the stocks that y'all have in the chat and some stocks I had requested that are interesting. But yeah, here's us on Friday. We were up 1% on Friday, and year to date, we're up 11.25%. We can also check out how Bitcoin's doing right now, just so we can see where the market will probably open on in a couple hours from now. Yeah, look at that. Bitcoin's had a nice little recovery. It's back to near all-time highs. So Bitcoin's doing great, and here are all the stocks that I own in here. So this is my dividend growth portfolio. So every single stock in here pays a dividend. Probably heard of a lot of these before, like a Google, Meta, McDonald's, maybe even a CEG, Constellation Energy. Then I have my little Roth IRA. It's only like $1,400. I got some more riskier small caps in there. But then we have our Moomoo portfolio. This is called my buy and hold portfolio, kind of in the top left there. Because once I buy a stock in here, I try not to really ever sell it. I try just to buy and hold it for the long run. And these are the stocks that I've picked in that portfolio. And then finally, last portfolio, I promise, this is our Webull account, our growthy portfolio that all time we're only up 13% in here. So I just like being transparent. We're only up 13% all time, but here are all of our losers and winners. I'll show you every stock that I own. How are we doing year to date in here? 22% year to date. And hey, we got $91 of dividends so far. So hey, is there any dividend investors out there? I do love dividend paying stocks. Yo, what up? Bobby said RXRX. What's up, dude? My Oxford communion recommended it. Well, let's check that one out. I think that one's owned by Nvidia actually. But yeah, so yeah, that's the portfolio update, and we'll be streaming later tonight as well. What up, big mans? Yeah, hope y'all are having a good Sunday, by the way. I'll start off going over this one company that someone I just saw talk about. What up, Bob? So he said ticker symbol RXRX. That's actually a company that's owned by Nvidia. So it's actually Nvidia's one of their smaller holdings, but this is RXRX. And to be honest with you, I've looked into this company. Nothing's really blowing me away here. Like, I don't know if me personally, I'm not going to buy any shares of this stock just because like they don't have much revenue. Like look at this. The revenue's 19 million the most recent quarter, and on that same quarter they're losing, 100 to 200 million in net income every quarter. So that's the one thing that does scare me about this company. Yeah, they're owned by Nvidia and ARK. That's the largest shareholder with the ARK ETFs, but this is that gene splitting company. It kind of RXRX looks just like what's it called? It's in Kathy Wood's portfolio. You know what? I'll just go to Kathy Wood's portfolio. Forget the exact name. Oh yeah, CRISPR Therapeutics. So yeah, look at this. This is another one that kind of hasn't been doing too well. Since its IPO, it's the same price that it was back in 2018. That's because they're still not really having any real revenues yet. 900,000. Only reason it was 35 million that quarter is because they actually sold off an asset. So anyway, the gene splitting companies haven't really produce any real revenue yet, but I am curious about the future of that. I think dividends have better tax incentives, I believe. Yeah, so hey, if you go watch my most recent TikTok or YouTube short, I do a little video about taxes and how like just owning stocks is so favorable like no matter who you are. So like for example, this is my main taxable account. Whenever I receive a dividend from McDonald's, even in my taxable account, it's completely tax-free. So whenever I receive that $23 dividend, it's completely tax-free, which is pretty cool because because the qualified dividends are taxed at long-term capital gains. If you make under 50,000, long-term capital gains are 0%. Pretty cool. All right. Hey, what up, Cynthia and Sad and John? What's up, man? Happy Sunday. Let's see. Sad said CHWY, Chewy stock. This is like the pet delivery company, right? So, what's the market cap? They're a $15 billion company. Pretty solid. Are they making any profits? So, yeah, they are. Look at that. They're actually making net income every quarter. So, as long as they keep that up, I mean, that looks pretty good. They have a bit of a leveraged balance sheet. The leverage did go up year over year. Basically, this liability ratio used to be 79. Now it's 87. not great. But I do like this net income trend, and the growth is starting to come back. If you scroll back here, they were having low single digit 3% growth. Now it's 8%. So the growth is starting to come back. So, it's probably won't outperform the market in the long run, but they're still interesting. All right. Let's see. Are you getting on the new bullish IPO? So this is BLSH. So again, this company isn't going to be huge. It's only a $4 billion market cap. But what we've seen with a lot of IPOs recently, like Figma, Circle, Corweave, some of the recent IPOs, they've done really well. Like as soon as the IPO, they go up like 50, 100, 150%. Then they start to fall off a little bit. But I wonder if we'll see that again for bullish. See if they just like instantly double, which is what we've seen with a lot of recent IPOs. So, yeah. Do you like CoreWeave? Hey, speaking of CoreWeave, you know what? Let's go back over there. That's another. Obviously, Nvidia has been buying the dip like crazy on CoreWeave. So here we go. Nvidia's portfolio. Yeah, CoreWeave is their largest holding. Again, just because Nvidia owns a stock doesn't mean you should. You want to go judge it for yourself off their financials. And again, they just IPO'd, so there's not too much data we get here. But the one little piece of data that we do get is this growth rate. Literally, the revenue went from 188 million to 980 million, up 4x year over year. Incredible. They're still not making any net income, but that revenue growth is crazy good. So looks like a growth company. They also just acquired CoreZ, which is a like Bitcoin mining software or a Bitcoin mining company. So that's cool. Someone said, Croc stock. Hey, yeah, we'll look at Crocs. So, hey, what up, Rudy? We'll look at SEZL as well. What app are you using? Hey, I'm on a brokerage right here, FDK. If you want to get this little software, I'm on this brokerage. It's in the link tree in my bio, the very first link there. It's an affiliate link, or you can just type into Google. It's a brokerage called Moomoo. But anyway, here's Crocs right here. They just sell a commodity, they just sell shoes. But here's one thing that has been hurting this company. They just lost a huge bit in net income, which I believe was some sort of one-time adjustment. Because look, they're usually always making a couple $100 million every quarter. So they also do some buybacks as well. But one thing that investors aren't too happy with is a slowing growth. Like they acquired Hey Dude a couple years back, and this one really hasn't done too well. It's down like double digits, like 30%. Crocs brand, though, did grow 2% year over year. Let's see, what were the analyst expectations? They beat on revenue, but yeah, huge miss on this net income. There was some weird thing there because they actually beat on EBIT. So yeah, that one might be worth looking into, but that whole industry is kind of struggling. Like we look at Nike, like they're well off their peak of all-time highs. Lululemon, man, has anyone seen Lululemon? Look at this bleed out on Lululemon. I mean, that's tough. All right, so someone said QQQ. Here's what I recommend. I actually recommend QQQM. This is actually the exact same thing as the QQQ, but with a lower expense ratio. They just don't market it because they wouldn't make as much money. And it literally looks like the QQQ hit an all-time high on Friday. So isn't that nuts? And basically, this is just an ETF. If we go to its top holdings, it's the exact same NASDAQ 100 strategy as the Qs. So it's NVIDIA, Microsoft, Apple, Amazon, Meta, Netflix, Google, all companies I'd happily own individually. So how do you find NVIDIA's holdings? Yeah, so you just go to, you click the Discover tab, and then you go to Insights at the top here, and then you can see all the super invested portfolio. MDO said, what app? Yeah, hey, sorry. Hey, if you want to get this little app, I'm on a brokerage right here. Keep all my stocks in here. If you want to get this software, this brokerage I'm on, it's in the link tree in my bio, very first link there. It's an affiliate link too, so if you go and deposit $100, we'll both get some free stocks. Or you can just type it into Google. It's a brokerage called Moomoo. Anyway, someone said Palantir. Let's check out Palantir. Then I want to look at we'll look at Sezzle. After this, we're looking at Sezzle, APLD. Yeah, those are all in. Yeah, you're right. So here is Palantir. I love this company. I mean, they're at an all-time high. The only thing that is unfortunate about Palantir is just this nutty valuation. So they're trading at 128 price to sales, not price to profits, not price to net income, but the price to revenues, 128. So pretty high. At this rate, they're kind of expected to double revenue by 2030, which they could pull off if they keep up this, 50% year-over-year growth CAGR. I mean, they could pull that off potentially. But check this out. This is what I love about Palantir. The government is a huge portion of their business, 55%, and it just hit a new record, up 49%. Incredible growth on the government revenue and on the commercial revenue. This is like with S&P 500 companies, mom and pop ice cream shops, whoever, and police stations use a lot of Palantir software, and they just had their first $1 billion quarter, and on that billion of revenue, they made 330 mil of net income. They have absolutely no debt, which is just crazy. So they're a debt-free company. Literally, if you look in the top right, $6 billion of cash. I mean, that's what I love about Palantir, but valuation's a little high. I would like to get exposure to them eventually, though, if I can get them at a good price. But yeah. All right, let's keep going. Hey, try not to spam here. Yeah, Tristan said IXHL. What's this one? IXHL, Inconnex Healthcare. So we don't really cover these kind of stocks on the channel. If you look in the top right there, the market cap, they're only a $41 million company. So that's it's too risky for me. But let's look at SEZL here. This is one that I think is not too risky. I would honestly put this one on your watch list to potentially look into this one, because this is a this is a fintech right here, and they had really good earnings, but the stock fell nonetheless. Like, check this out. This is what I love about Sezzle. So they have incredible margins. So if we go down here, oops, yo, Angel, what's up? How y'all doing? Hope y'all are having a good Sunday. Yeah, long time no see. But check this out. Here's what I love about Sezzle. If we look at the revenue, it's up 123% year over year, doing 104 mil of revenue. Out of that 104 mil of revenue, they made 36 million of net income. So they have incredible margins, 30+% margins, and the margin keeps on growing. So pretty good growth there on Sezzle. So the PE is a 31, pretty fair for such a growthy company. So I just love that one. Oh, and I forgot to show you how the balance sheet is just like deleveraged like crazy. Like, check this out. The liabilities, like from 1 year ago, were 84% of the assets. Now it's only 57% while growing the assets. Everything's heading in the right direction there from a financial point of view. Yo, German, what's up, man? What's the update on technical issues on Friday? Oh, hey, yeah, that was just my Wi-Fi. I was bugging, but we're back. I appreciate y'all. I feel like APLD would become Corweave. Yeah, so basically, look at APLD. So basically, if we go to APLD's, if we go to NVIDIA's holdings, NVIDIA's portfolio, one of their holdings is APLD. And basically, APLD just had a huge partnership with Corweave. So I kind of feel like that was orchestrated by NVIDIA. It's kind of the benefits of being owned by NVIDIA. NVIDIA got APLD and Corweave a huge deal. And that's initially why they rallied right here. And then they kind of gave some updated guidance on it on earnings, and the stock went up like crazy. I don't think, only small bad news here is that they're still losing a bit of money, but it's not the end of the world. Like, look, they lost 50 mil the most recent quarter, 18% less than the previous year. Assets grow every quarter. 60. That's the best asset to liability ratio we've had like ever on APLD. It used to be 83, now it's only 66. This is great. And they're investing a ton in the future. Wow, the cash from investing activities is 200 mil in the past couple quarters. Pretty crazy. Anyway, yeah, that falls under the NVIDIA portfolio. So let's look at, MMI. I cannot look at DKNG stock because of the sector. Last time I did, the stream got taken down. So I'm just going to avoid that one. Sorry. I see you keep asking for it. I just want to tell you. But I'll look at another one if you got. But let's check out Hims and Hers. This is like a lot of people think they're a meme stock, but this is no meme company because of how growthy they are. Like, check this out. Revenue's up 73% year over year. But the reason the stock is kind of struggling recently is because of the future growth uncertainty, because they used to sell this weight loss prescription called Ozempic on their website. And then out of nowhere, NVO, Novo Nordisk, the owner of Ozempic, dropped them as a partner out of nowhere. So this company no longer sells a weight loss prescription, which was a huge revenue driver for this company. But here's, check this out. Revenue's up 72, and they're making 40-50 mil in net income a quarter. They did issue $1 billion of debt to get $1 billion of cash. Like, check this out. If we go to their cash on hand, they have $1.14 billion of cash. Assets also went up by $1.14 billion, so that's kind of why the assets and liabilities went up together. But that's interesting. What happens is, hey, Colin, I'm on a brokerage right here. This is where I keep my stocks and stuff. If you want to get this little software I'm on, this brokerage, it's in the link tree in my bio. Very first link there. All right, let's see here. Let's see. BRX, what are your thoughts? Hey, this is one of my favorite REITs of all time. So if you're looking for a real estate investment trust, this is one of my favorite ones. They do triple net leases for grocery stores. So I like it more than Realty Income. In my opinion, I think it'll have a little bit better growth. Realty Income is below where it was in 2019. This one's well above. Actually, I can pull that up real quick. But I just think BRX is like, look at this. Realty Income is still down from 2019. But yeah, I think that the grocery stores are going to be a great performer. Yeah, there's Realty Income down from their 2019 price. But anyway, BRX Bricksmore, they're a grocery store REIT. They have a nice dividend. They're going to go up when interest rates go down. They're interest rate sensitive, so when rates go down, this will go up. Their main customers are Kroger, Publix, Ross, TJX, a lot of those kind of tenants. Time to get a new internet. Yeah, I know. I'm looking for new IPOs under $20. Hey, what is Bullish IPOing at? I don't know. $28 to $31. Hey. What happens when APLD goes profitable to the moon? Yeah, that'd be great, Bob. Yeah, exactly. Him's under investigation. Whoa, what for? Honest, I didn't hear about that news. Really? We'll look at Palantir in a minute here. We did just look at them. Actually, I want to look at NVO right here. What up? Delilah said NVO stock. So we were just talking about Ozempic. This is actually the company that owns Ozempic. So this is Novo Nordisk. They're a pure weight loss prescription play. So they own Ozempic and Wegovy. That's what Elon Musk is on. Elon Musk is on Ozempic. And look at this. 94% of the revenue just comes from their obesity care products. So right now, the fundamentals are great. They're printing money, $4.2 billion net income in the most recent quarter, up 45% from the previous year. Revenue's only up 23%, so they're growing their net margin. They have a nice dividend, 3.5% dividend. But the one bad news here is, and this is the only reason I could really suspect why this PE has collapsed, especially the past year here, it's because their patent for Ozempic expires in a couple years, like 2 years, and it might be being priced in right now. I don't know. But I think that one's worth looking into if you like those weight loss prescriptions. All right, let's see. GRND. What's this one? GRND. Right. This is that grinder. So check this out. They're down 12% on Friday. Let's see if we can figure out why. Did they report earnings? So they missed on revenue, they missed on net income, and they missed on EBIT. So it was a triple miss. They missed by 10-15%. So that's the unfortunate news. I guess they just missed on earnings. That's why they fell so much. They're still they're still a profitable company. They had a little one-time adjustment last quarter, making it go negative 123 mil. Something great just happened to their balance sheet. They used to have more liabilities than assets. Did they sell an asset or issue shares? They issued shares or something here. Anyway, there you go. Let's see. Cocoa. Hey, this is a cool stock. So yeah, this is Vita Coco, man. We buy their coconut water all the time. They have this coconut flavor or pineapple flavored coconut water, and bro, it's delicious. And anyway, this stock is struggling though. Apparently, they're having some troubles with Costco. Costco's hurting them because they're still not a huge company. But yeah, Vita Coconut Water, that's most of the revenue. And it's doing really good, up 25% year over year. So they literally just sell a drink. They literally just sell coconut water. So they just sell a commodity. But they are making net income every quarter. They're on my watch list. So that's an interesting one. I just really like their product. All right, let's see. LTH. What's LTH? Yeah, IDK, bro. I can't look at that stock right there. I don't know what ticker symbol that is. Oh, Lifetime Fitness. Hey, check this out. So this is that gym. I actually used to have a subscription to a Lifetime gym back in Tennessee. But they're trading at a 26 PE. So they're making, look at that net income. Geez, man, gyms will sell you on a subscription service, and they just make a bunch of money from it. Look at that, 70 mil plus a net income. Revenue's up 14, net income. What's the margins on this? So gyms have about a 5 to 10% net margin, or at least Lifetime does. I know they do buybacks, so check this out. Or actually, let me verify that. Never mind, they're not doing buybacks. Well, you know what? I'll just go check. We go to the cash flow statement, issuance retirement of stock. Yeah, they haven't done any buybacks since 2024. Anyway. What platform are you using? Yeah, hey, Jose, this is actually a brokerage right here. If you want to get this software I'm on, I like keeping my stocks in here. It's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you deposit $100, we'll both get 5 free stocks. So anyway, or you can just type it into Google. Brokerage called Moomoo. Anyway, here's Celsius right here. Yeah, this is another drink company. You're right. So they just acquired Alani. If anyone's heard of Alani before, it's like another energy drink. I think they're one of the, yeah, so Alani's the second largest shareholder here. Whoa, Alliance Bernstein owns 7% of the shares? What the? That's ticker symbol AB. So I guess ticker symbol AB stock. This one has a high dividend. This is like a dividend play, by the way. You do get a K1 tax form from AB, so I wouldn't buy them. But anyway, let's get back to Celsius. I'm kind of going off track here. They did have a nice little gap up. Pepsi kind of screwed them a while back with their manufacturing. But it looks like this is great news. They're finally back to growth now that the Alani acquisition has gone through. Some of this is inorganic growth, but this is why the stock initially fell so much. You know, this company used to make 50 to 80 million in net income a quarter, and it went negative, lost all growth, terrible. But now it's back. 100 million net income the most recent quarter. Again, a lot of this is from the Alani merger. So anyway, they're cool. They also have no debt, I believe. Well, I don't know after this merger. I haven't checked, but they used to have no debt. Can I ask why Sezzle dropped so much? Yeah, I'm also looking to figure out why Sezzle dropped so much. If I go to the news tab here, I couldn't really find it. Like, maybe the PE was just high or something, but I cannot find an explanation why. Like, I looked in the news. I mean, I couldn't really figure out why, because the earnings were strong. Maybe there was something like I don't know. Xpeng, that's a company I wouldn't buy, to be honest with you. So yo, what up? Alsker said Xpeng. So this is a company I'd probably stay away from, just because of the huge losses. I mean, they make like flying cars or whatever, but they're a Chinese company first off. So they're a Chinese company, vehicle delivery, 36,000 monthly vehicle delivered. That's good. But the bad news is the losses here. So check this out. I mean, it is getting a little better. They lost 51% less, but look at that. They lost 700 mil this quarter, over $1 billion, 1.9 bill, 1.3 bill. So we really want to see this company get closer to profitability. Do they have growth? Yeah, they do have growth. So wow, look at that. Up 150% year over year. And I just realized we're looking in Chinese dollars. So we'll convert that to USD. So they're not actually losing as much as I thought. So in US dollars, look at that. They're only losing a couple $100 million a quarter. What was the market cap? I guess it's not the end of the world. $19 billion company, losing around $1 billion a year. It's better than like Lucid and some of these other ones. Because I don't support such behavior. Oh, what up, German? Yeah, I feel you on that one. ALAB, yeah, this is Astera Labs. Like, this is a great fundamental stock. Hey, we'll look at the trade desk and Lyft, RITM, yeah, and Innodata. I want to get to all the stocks here. And Amazon, yeah, I want to get all these too. So anyway, here's Astera Labs. This is why the stock's at an all-time high. They deserve it because they're so growthy. I mean, look, revenue went from 76 mil to 191 mil, up 150%. So the revenue's exploded, super growthy. And on that 150 mil of revenue, they made 51 mil of net income. So they're profitable now. What was the margin on that? 26% net margin, and they have a fortress of a balance sheet. Astera Labs literally has no debt at all and over $1 billion of cash. So for all those reasons, and the cash flow just exploded higher. So for all those reasons, I can see why that one's at all-time highs. They deserve it. If they weren't, I'd be suspicious because of how good those earnings were. Here's Innodata, another one I do own in my Robinhood account. I actually own this one in my Roth IRA. I got 9 shares of Innodata just because they're a bit risky. I don't want to have a huge chunk of my portfolio in them, but I still decided to pick up 9 shares because I like them. This is another really growthy company, and that's why I own them. I mean, look, revenue here is up 100%, and this is organic. Like, they didn't acquire a company to get this. So revenue's up 100%. On their main business. We can look at the net income as well. They're now making net income every quarter. They have another company with a really good balance sheet. They're deleveraging like crazy. Liabilities went down from 57% of the assets to only 34%. Cash flows are strong. So I really like Innodata. That one's kind of a long-term like buy and hold stock. Again, like a $1.5 billion market cap. They are a bit it's tiny, but here's a company that's actually really big. This is the Trade Desk, $26 billion company. They're a TV advertising stock, and they just reported earnings, and the stock tanked 39%. And, you know, the PE, this is the thing, it's probably just coming to like a realistic PE. They gave guidance. The guidance showed slowing growth. I think it was like high single digit growth was the guidance. Anything single digit isn't great, but I, so that's why the PE is falling, and it's still at a 65 PE, not exactly cheap. But here's the net income they're making, and the margins fell a little bit. So look, revenue increased 18%, net income only was up by 6. So that means the margins did fall by 10% year over year. But still, they're making net income every quarter. No chance of bankruptcy here. I think the valuation might just be a little high, even after the dip. Just like a little high, little expensive, not that much. But they're printing free cash flow, a couple $100 million of free cash flow a quarter. But we can see, actually, let me look at the Morningstar research right here. What did the bull say? TGD's proprietary algorithms, real-time bidding. Anyway, I don't want to read all that, but Trade Desk is interesting. They're a cool advertising stock. All right. Let's see. Can you do Lyft? Yeah, what up, Resistance? What's up, man? Lyft. All right, so, we can look at all these stocks here. How about Cisco? Hey, ever since the Splunk acquisition, Cisco's a really cool company. Super growthy, one segment of their business. But anyway, let me show you Lyft right here. This is like the Uber competitor. I think I've used a Lyft once before, but check this out. Look at the free cash flow here. The free cash flow is finally at its all-time best. The financials are at the all-time best, but the stock is at still like an all-time low. So check this out. They're printing free cash flow. I mean, a couple $100 million, they used to lose a lot of free cash flow every quarter. Same with net income. They're finally starting to get net income positive. Look, they made net income the 3 most recent quarters. They used to lose a bunch of net income every quarter, a couple $100 million. So they're finally profitable on net income and free cash flow. So I think now's a decent time to look into them. Like a cheaper Uber. So let's see. CSCO. So this is Cisco right here. They acquired cybersecurity firm Splunk, which I think was genius. So if we go to where the revenue comes from, networking is half the revenue, services, and then they have security. And check this out. Where did all these huge look? Last quarter it was up 116% year over year. Where did all this come from? Well, basically the Splunk acquisition, which is genius, cybersecurity firm. So that's one thing I like. They're printing money. I mean, look at this. They're making like 2.5 bill of net income every quarter. Free cash flow is just as good. You get a nice yield as well. Yeah, 2.3% dividend yield. So pretty cool. Hey, what up, Edzilla? Hope you're having a good Sunday, everyone. Hey, if you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. I'm on a brokerage right here. I like to keep all my stocks in here and keep my cash in here. So yeah, if you want to get this app, software brokerage, is in the link tree in my bio, the very first link there. It's an affiliate link too. So if you sign up and deposit $100, we'll both get 5 free stocks. So it's an affiliate link. I'd appreciate that. Anyway, or you can just type it into Google, brokerage called Moomoo. Anyway, let's see. Ranger John said UNH. Let's check it out. United Health. Let's do it. So United Health, this industry, this sector has just been a tough hold recently because of the government regulation toward UNH, and kind of all the Medicare, Medicaid providers are tough. And here's the thing, UNH is being investigated for fraud right now. And if they get accused of fraud, they'll actually get kicked out of Medicare and Medicaid for 5 years, which would be devastating for the company. And that's why the multiple is collapsed. I mean, the PE is a 10. The industry, they set really the industry average. The industry average used to be a 22. So, but we're a customer. We use their OptumRx. I mean, OptumRx has just grown like crazy. I mean, maybe this is why the government's not too happy with them. How does their revenue go from 35 bill to 133 bill? Crazy. That's just one segment. How's the UNH business? It's like 300 bill of annual revenue. Check this out. Yeah, 298 billion in revenue. Geez. Anyway, they're priced in this multiple right here, the 10 PE. The net income could fall another 20 to 30%, and the company would still be somewhat reasonably valued. They still have a nice yield, a 3.4% dividend yield as well. So I think UNH might be worth a nibble. I wouldn't put a huge position in that one. I wouldn't go all in on UNH. Don't have it as a meaningful position, but I would maybe nibble on it, quarter-size position or something. And I'm not as optimistic as you are. Entry point is 30. Hey, German, I agree. I'm not too optimistic on Innodata at this price. My cost basis is $33 a share. And again, as optimistic as I am about this stock, I can't have it as a meaningful position. It's only 9 shares. Same with like a lot of stocks in my Webull portfolio. As much as I love Supermicro and SoFi and PSIX and a lot of these smaller companies, I can't have huge meaningful size positions in them just because they're so risky. It's fun having a little bit, but not a lot of it of those risky stocks. Anyway, is Corweave a buy? Hey, is Microsoft better than Google? Probably in the long run, Microsoft might be a safer play than Google, but I think they'll both be winners. I own Google personally. Would you say the S&P 500 is the best and safest thing to invest in? Best, best probably. Safest would just be like AAA T bonds, but yeah, I'm a huge fan of the S&P 500. It should return just like 8% on average a year. Hey, Invested '09, thanks so much for the lightning bolt. We'll check it out. Oh, and we can look at Symbiotic too. That's like my second favorite robotic stocks behind Amazon. Amazon's my favorite robotics, but they're not a pure play. But check this out. Here's Google. Here's the cool thing. Even though the stock is pretty close to all-time highs, the valuation isn't. The PE ratio, the price to net income multiple, is a 21 right now, which is, right below its industry average. So I feel like it has the ability to stretch up to maybe like a 23, 24 PE and hit a new all-time high. I mean, look at it. The ratio, the E part of the ratio has gone up so much. I mean, look, last quarter, the net income, these year-over-year growth rates are nuts, and that's mainly because of their margin expansion. Google has a 30% net margin. So look at this. Google made $28 billion of net income this quarter. What is Google doing with $28 billion in net income every quarter? Well, this is what I love about Google, how shareholder friendly they are. They literally spend $15 billion every quarter, $13.6 billion this quarter, literally just buying back their own stock. Let me get my water here. Sorry. But that's what's so cool. So look at this. If you look at the net income is up 19% year over year, but your return as a shareholder via EPS, you're up 22.2% year over year. So that's the power of the buybacks. Net income's up 19, but your return up 22. Pretty cool. Such a shareholder-friendly company. They own YouTube, Android, Waymo, Quantum Chips, cybersecurity firm Wiz, Google Cloud. I mean, Google's like an ETF in one. Yo, LACA, Lackle Dime. I'm saying your name wrong. I'm sorry, but thanks so much for the rose. I do appreciate that. Yo, what up, Tyler G? What's up, man? OptumRx is horrible. I have trouble filing. Dang, German. Michael said CrowdStrike. Let's see, CrowdStrike, CRW. Oh, and we can look at Corweave too. Corweave is, because of the net income losses on Corweave, I am a little, oopsie, there we go. Sorry, I'll pull up Corweave after this. The only thing I love about Corweave is the growth of it and the huge NVIDIA partnership that's helping them. But anyway, here's CrowdStrike right here. This is one of my favorite cybersecurity picks. So if you're looking for a company in the cybersecurity industry, CrowdStrike is probably my top pick. But I don't know if y'all remember a long time ago. Actually, I can show you the exact day. This was the exact day right here. They had an outage. It literally crashed like a bunch of Windows computers that got the update in the airports. Literally that day in America, every single airplane in the sky in America had to land. It was a huge deal. It was a huge deal. And they're still facing lawsuit charges from that, which is leading to these negative net income quarters because of these lawsuits they're still facing because of the outage. But I do like CrowdStrike. I think in the winter, they're going to be a great one. But yeah, let's look at Corweave right here. That's a company inside the NVIDIA ecosystem, or the NVIDIA portfolio, actually. And Corweave and APLD just went into a huge partnership. Corweave also just acquired CoreZ, which is like a Bitcoin mining company. So I guess you get some exposure to Bitcoin with this stock. But the best thing I liked about this company is, again, they just IPO'd, so we don't get too much data here. But look at the revenue year-over-year growth. I mean, the revenue went from 188 million to 980 million, a 420% increase. That's the one thing I did like about Corweave. So, yeah. What up, Christopher? He said, thoughts on Snow? This is like Palantir's biggest competitor. So, they do the exact same thing Palantir does. But there's one thing I like about this company and one thing I don't like about this company. So check this out. Here's the bad news for Snowflake, or here's the good news first. You know what? I'll show you this. The good news is just the growth of the revenue. I mean, it literally hits a new record every quarter. I mean, it's a billion of revenue just this quarter. Um, if we go to it on an annual basis, this is the trend you really want to see for a company at a new record. But here's the bad news. So, despite all this nice revenue growth, the net income is very negative, and the trend isn't exactly getting better. They lost 35% more. They're losing like 3 to 400 million of net income every quarter. That's mainly thanks to their stock-based comp because the free cash flow is positive, but net income's negative. Stock-based comp is included in GAAP net income, so that's why they're losing a couple hundred mil a quarter. It's tough. So, yeah. But I love the growth there. What side are you on? Love the visuals. Yeah, hey, Leica. I'm actually on a brokerage right here. I love keeping my stock. I keep my stocks in here. So if you want to get this software, this brokerage that I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So if you sign up and deposit $100, we'll both get some free stocks. But you don't even have to. All the analysis tools are free. Is Coca-Cola a good stock? Let's check it out. How do you see the NVIDIA portfolio? Yeah, hey, you just go to the Discover tab and then you click Insights at the top there. And I have a tutorial on how to use this software I'm on, this app I'm on as well, on my YouTube channel. All right, so is Coca-Cola a good stock? I think so. Probably won't outperform the market in the long run, but yeah, here's Warren Buffett's portfolio. Warren Buffett, 10% of his portfolio is in Coca-Cola. So, Warren Buffett approves my message. So I guess, but Coca-Cola is mainly a dividend play. You're buying this for the nice, what's the yield here? Yeah, a near 3% dividend on this company. The dividend is sustainable. Let's see the net income they're making. Yeah, look at that. They're making 3 to 4 billion in net income every quarter. So they're making a lot of net income. Share most of it to you through dividends. Yeah, Berkshire Hathaway, which is Warren Buffett's portfolio, is the largest shareholder. Crazy. All right. Is Coca-Cola stock better than Pepsi? I think so, in my opinion. I think it's a safer play. All right, let's see. Hey, what up, animals? Hope you're having a good Sunday. Good to see you. What's the best stock for monthly dividends with no growth? Probably just a Realty Income, ticker symbol O. And I saw someone he says CCJ, can you please check out? So this is Cameco. This is my favorite uranium play. So a lot of nuclear reactors are ordering uranium from Canada. And this is Canada's largest uranium company. We're not buying Russian uranium anymore. We're trying to be more rare earth mineral independent. So we're ordering it from Canada. And, this is my favorite uranium play right here. So they're making net income every quarter too. So, or if you're looking for another uranium ETF or the uranium ETF, it's ticker symbol URA. And it kind of just holds a basket of all the uranium stocks. The largest holding in here is Cameco, though, just 21%. So yeah, I like Cameco if I wanted uranium exposure. What do you think of meme coin? Hey, we don't really look at those, Ant. Oh, what's up? Thoughts on ADP? What's this one? Is that advanced data processing or automatic data processing? Okay, check that out. The stock's done really good. Look at that. It's pretty close to an all-time high. Let's go check out the fundamentals. So look at that. You get a near 2% dividend yield, pretty nice yield on them. The PE is a 30. So employer services, how's that doing? So it did hit a new record for the full year 2024. It's growing single digits. What about their professional employer? Also growing high single digits. So look at this net income. Wow. They're nearly making $1 billion of net income every single quarter. So I guess that's the good news here. They're making $1 billion in net income every quarter. PE is a 30. Net income is expected to grow. So that's interesting. They are the largest payroll software provider in the U.S. Interesting. Oh, and they make float off customer deposits. That's interesting. All right, that's cool. This earnings season is going to be rough for retailers and importer consumer brands. Hey, yeah, we'll see. I wanted to look at Symbiotic, so I forgot to get to that one. I apologize. So here's Symbiotic. This is my second favorite robotics company. So this is a warehouse robotics stock that their main customer is actually Walmart. Hey, thanks again, Leica, for the 15 roses and invested 09 for the rose. Yeah, we'll look at CEG after this. I got you, invested 09. Thanks again for the rose. And we'll look at BBAI. Wait, remind me to look at BBAI. All right, so here we go. So here's Symbiotic. This company, if we go to its shareholders, the second largest shareholder is actually Walmart. So not only is Walmart their biggest customer, but it's also they decided to take an investment in Symbiotic. That's how much Walmart, believes in their product, I guess. And look at this. I love the growth here. Out of all the robotics companies, I love this one for the growth. They have real IP, real patents. I would stay away from like the Rich Tech Robotics and some of those other names. This one has real revenue, real patents, and nice nice trend. They are still losing net income every quarter. That's the one thing you do got to be careful with. They are still losing net income every quarter, but the trend is getting better, and they're barely losing any money. And this revenue growth kind of makes it okay, in my opinion. So, yeah, that's Symbiotic. It's a robotics play. If you're looking for one, I like Amazon more, but Amazon's not like a pure robotics play. So, what was the stock I wanted to look at? Well, CEG. Yeah. Let's look at CEG. Oh, yo. Then we'll look at what up, Cam? We'll look at MTCH. Black Sky. Yo, remind me to look at these stocks. Dividend TTM means yearly dividend. Trailing 12 months. Yeah, TTM stands for trailing 12 months. But I wanted to talk about this stock right here. This is CEG Constellation Energy. It's my largest holding in this account. And this is the largest nuclear energy play in the US. They own the most amount of nuclear reactors out of any other publicly traded company. So, and nuclear's been on fire recently with the executive orders that have benefited them. It looks like the sentiment is switching from solar to nuclear right now. Pretty cool. Especially doing with the electricity demand prices. I mean, Microsoft and Meta have partnerships with CEG to buy energy from them. It's pretty cool. So let's keep going. BBAI as well. So yeah, basically I don't have much to say about this one. They report earnings on August 11th, which is tomorrow. Yeah, so tomorrow this stock is either going to go up or down a bunch. So yeah, basically you're just waiting for earnings tomorrow. I guess we'll see what happens. That probably wasn't too helpful. I apologize there, but let's look at MTCH. So yeah, MTCH, this is Match Group. They own Tinder and some of those other apps. And look at that. The stock has not done good. They did just start paying a dividend to try and reward shareholders. So check this out. You get a 1.58% dividend and the payout ratio is only at 10%. So they actually have room to raise their dividend. Oh yeah, look at that. That's where 55% of the revenue comes from. And then I guess these other apps. What is all these? I don't know. Well, let's just see how they're doing. How's Tinder doing? Well, looks like it's not growing too much. It's down 3% year over year. That might be why the stock is kind of struggling. Yeah, look at that. Revenue's down 0.04% year over year, but they are still making a lot of net income every quarter. Wow. They're easily making over 100 mil of net income a quarter. Let's go see how much their dividend cost. Probably around 12 million, I'm going to guess. It's done it weird. It does not cost, it costs about 25 mil a quarter. But actually, wow, they're doing crazy buybacks. Look at that. They're spending 200 mil a quarter on buybacks. So if we go to the net income, so check this out. Net income is down 5.8% year over year, but EPS is actually up 2% year over year. Remember, the EPS is just net income per share, and the amount of shares went down like crazy. So that's how the net income was negative, but the net income per share was positive. The share part of the ratio went down a bunch. That might be worth looking into. Those crazy buybacks. Do you think Wendys hit the bottom yet? Man, I feel bad if you own Wendys. Oh, what up, Patrick? You said ChargePoint. Yo, that's actually my biggest loser of all time is ChargePoint stock. Maybe I can pull them up and show you, be transparent. But check this out. Wendys, unfortunately, yeah, this stock, let's see. If we scroll out to the monthly, man, Wendys is at the same price that it was back in 2007. They have a bit of an unsustainable dividend, an 8.8% dividend yield. What is the net income doing? So actually, this is the good news. They are making like 50 mil in net income a quarter. Didn't Wendys just have some new I don't know, it's called like the unlucky meal or something like that. I don't know. Hopefully that'll drive sales. Yeah, I'd rather just pick McDonald's, honestly, but that one could be close to a bottom. I don't know. I think it might be worth buying McDonald's instead. I don't know. So let me look at ChargePoint. So actually, I'll show you this right here. So we go over here and look up ChargePoint CHPT. So let me show you. So look, this stuff. Oh, they just reverse split. No way. So this was an $11 stock. I sold. So look at this. I sold this company. Man, was it right? Yeah, I sold all my shares on this day right here. I sold 66 shares at $2.85. So this is non-stock split adjusted. So $2.85. And guess where I bought it? So I sold all my shares at $2.85 after this huge like avalanche tank. Here's where I bought all my shares. I bought a share there. Look up right here. I was dude, the stock split saying this was at $300 a share, but the stock price at the time was, $17. I bought like a lot of shares. Yeah, 10 shares on this day. So yeah, that was my biggest loser. So sometimes it's okay to take the loss. And here's why. Here's why ChargePoint is such a trash company, and they'll probably deserve, they're going to keep on going lower, in my opinion. Look in the top right. You see market cap? They're a $258 million company. So remember, you're buying a company, you're buying it at a valuation of a company where the whole companies were 250 mil, and here's what you're buying. You're buying a company that literally loses like 50 to 70 mil of net income every quarter. 57 million, it's like 20% of the market cap. So anyway, they just can never get profitable. This is the classic kind of company you don't want to buy, even though they're at all-time lows and they could recover. I just don't think it's worth it. So Marvel, yeah, this is one of the cheapest chip plays out there, and I'm actually like looking into this one. I really like Marvel Technologies. They just now got profitable as well. Check this out. If we look at the net income, they used to lose an unhealthy amount, a couple hundred mil every quarter. Well, now in the two most recent quarters, they're making a couple hundred mil every quarter. So the net income is finally starting to improve. I love seeing that. So that's the good news. And they pay a small dividend. Can you look at Fiserv? Yeah, I never found anything too great about this company. Well, let's go find out. So, dang, yeah, look at that. The stock just keeps like step-stoning down. Not great. Let's see if we can find out why. So they're a merchant and financial company. Let's see. So they beat on revenue. They missed on net income and missed on EBIT. So they missed. Actually, no, they missed on revenue. So they missed on every metric, just slightly. Yeah, so revenue's up 8%, net income's up 13%. So first off, they're printing money. I mean, they're making like close to $1 billion in net income every quarter. No dividend on this company. So are they doing buybacks? Let's see. They are. No way. Hold on. Let me see how much buybacks they're doing. Right here, dude. They're literally spending 1 to 2 billion of net income every quarter buying back their own stock. They have literally bought back 10% of the entire company just in the past year. So I guess buying shares before today really hasn't been the move. So they bought back, 10% of the company at a much higher stock price. But wow, they're very shareholder friendly. I'll actually add them to the watch list. I see why you like them. I wonder why they're falling so much. I wonder what like the real reason is. Let's see. Do Sweet Green. Is that SG? So yeah, this is like a Chipotle competitor. So they just sell like fresh salads. I saw one in like New York, but the company's just losing a lot of money right now, and they're missing on every metric. Like, look at this. This is a huge miss, actually. Analysts were expecting 191 mil. They reported 185. They missed by almost double on the net income as well. So they were expecting like 15 million of losses, and they lost 23 million. So it's a tough buy right now. I'd probably rather go with the Chipotle than a Sweet Green right now. Is it a buy the dip opportunity for cybersecurity? Hey, PANW looks pretty fair right now. Colby said Intel stock. So Intel has just been a disappointer. If y'all didn't know, Intel is the same stock price that it was back in 1998. So imagine that you buy a stock in 1998 and it's the same price that it is today. So here's why people do like Intel. Like, there's some good news and bad news. Here's the good news. I mean, they have a huge market share, 63%, it went from 66% market share to 63%. Bad news. But here's why the stock is really struggling. It's these huge losses. I mean, if we zoom out, here's what you used to buy on Intel. You used to be buying a company that was making a couple billion of net income every quarter. Well, now, I mean, it's super choppy. I mean, they lost 17 billion this quarter, 3 billion this quarter, 1 billion this quarter. So they're losing so much money on net income and free cash flow. They're burning through cash. So it's just a tough buy right now. It's kind of like a rebound play. What app is this? Yeah, hey, Mikey, I'm actually on a brokerage right now. So if you want to get this software, I'm on this app. It's in the link tree in my bio, very first link there. So Wander said the bullish IPO. So hey, yeah, BLSH. So the bullish IPO. There's the thing. I need to look into them more, but they're a $4 billion market cap. So only a $4 billion company. What industry are they in? Digital asset platform. So headquartered in the Cayman Islands. I do wonder if this is crypto related. But what we have seen with a lot of the IPOs recently, like Corweave, Figma, and Circle, some of these IPOs recently have gone crazy. And like as soon as they IPO, they go up like 150%. I just sold all my Intel. Hey, dang. Yeah, that's unfortunate. But that's probably the right move in the long run. That was a tough buy. Someone said Sunrun, or Eunice said Sunrun stock. This is another one that is a tough buy, or actually, I don't think it is a buy at all, because I'll just show you the numbers for yourself. Then you can draw your own conclusion. Don't just listen to me. But this is a $2.7 billion company. So kind of think about that logically. Like the whole company's worth $2.7 billion. You're buying a company that lost $270 million just this quarter of net income. That's 10% of the entire company's market cap. They've lost in net income. It's not just this quarter either. They lost another $280 million last quarter, $3.4 billion this quarter, $400 million this quarter. So they're just burning through cash, And honestly, I think there might be a real chance of bankruptcy here with Sunrun. So yeah, you get solar exposure, but those net income losses are so scary. It's probably why the stock hasn't done too well. Yo, HH, I'll cover that. This is a meme stock. I'm pretty sure it's like some fake satellite company. This year's Black Sky Technology. I haven't found any value in here. Like it's a $600 million. So here's the thing. This is a $600 million market cap. Let's see. So imagery and software, professional engineering services. Well, look at this net income. Remember, it's a $600 million company, and they lost 40 mil this quarter. Then 12 mil, 20 mil. So they're losing a huge chunk of their market cap every year. The sales are down year over year. I mean, they're not growing. Sales are down 11%. So it's just a tough buy. I don't really see much value in BKSY besides like a meme, maybe swing trade. Covered calls on Intel. Yeah, hey, that's been the move, Ace, to sell calls on Intel. So let's see. What is this one? Edison International. So yeah, this is EIX. Well, it's funny how they're called Edison International. This is a company that's just in California. So this is a California utility play. I don't know if y'all remember those California wildfires. It was on this day right here. It was in January 2025, January 8th. They got blamed for the California wildfires and have to pay fines for it. So from like faulty loose wires or something that helped spread the fire, make it worse. So that one is just in some lawsuits from the California wildfires. But this is a regulated utility. They have a huge yield, a 7.5% dividend yield. Yeah, that's EIX. They're making a lot of net income every quarter. So besides that, some people just want to stay away from California utilities. But besides that lawsuit, they might be interesting. WM, hey, this is Waste Management. So I love this company, probably like one of the safest stocks out there, to just buy and hold forever. Oh yeah, hey Scooter King, I'm actually on a brokerage right here. If you want to get this software I'm on, it's in the link tree in my bio, first link there. Or you can type it into Google. It's a brokerage called Moomoo. Oh yeah, we'll look at Arista Networks after this. And yo, Francisco, give me a ticker symbol. Give me a ticker symbol, and we can check that out. We'll look at Taiwan Semi, ET, Cat. I'll get to all these. So what up, Northern Jays? Yeah. So we'll look at Octa. Remind me to look at these. I want to get to all of them. Thanks again. Hey, Fly. Thanks so much, Fly, for the 2 roses and Northern Jays for the 5 roses. Yeah, I got you. So here's Waste Management. Obviously, everyone needs to throw away trash. It's an industry that I think really isn't going anywhere. So yeah, we can see where the revenue comes from. They also have a huge real estate portfolio. They have so much land, like property that they have for landfills that are valuable land. But anyway, check this out. This is the net income they're making. Very consistent, $800 million net income every quarter. Then they have a nice dividend. They do share buybacks as well. So Waste Management, perfect like buy and hold forever stock. So let's look at Octa. Then we'll get to Arista Networks. Hey, no way. Lisa, hey, thanks so much for all the gifts. I do appreciate that. For the 8 cats. Thank you so much. I appreciate that. So here's Octa. This is a software company. The software for my college actually has like the little Octa logo in like the bottom left. So I technically use their software, or maybe there's some like cloud service provider. I don't know, but check this out. I think they kind of look like DocuSign stock. They peaked in 2021 and have really never recovered since, like a PayPal too. But here's the thing. This company's now the most profitable they've ever been. Like, look, it was a tough buyback here. They were losing 100 mil plus in net income a quarter. And now, they're making net income every quarter, every single quarter for the past 4 quarters. The revenue growth did slow, only up 11% year over year. But still, I really like this company. They're printing free cash flow as well. So I think they're just a cheap company just a cheap valuation company for a pretty good business. So here's Arista Network, ANET. This stock should be at like all-time highs. They've been performing incredible. Yeah, look at that. Arista Network is at all-time highs right now. So yeah, congrats if you own this company. You got to be up on your position. And let's see. So yeah, they sell products and services. Yeah, look at this beat. So the orange line is what the analysts were expecting. Analysts were expecting 2.1 bill of revenue. Well, they made 2.2 bill. Analysts were expecting 60 cents of EPS. They made 70 cents. So they beat on every metric. Revenue grew by 30%. Net income grew by 33%. Look at that. They're making 600 to 700 or 800 to 900 million of net income every quarter. I mean, it was 888.8 mil. So fortress of a balance sheet as well. So I can see why Arista Networks is at an all-time high. Is Lockheed Martin still a hold? Yeah, it might. Lockheed Martin had some not great earnings. There was some other stuff. Oh yeah, Pedro, what's up? So he said Taiwan Semi. So this is one of my favorite chip plays right now. So if you don't own Nvidia or AMD or any sort of chip play, Taiwan Semi I think might be worth buying even at all-time highs, because check this out. Look at that. The stock is at all-time highs. They're like 1-2% off of it. But look at the valuation. The valuation is nowhere near at all-time highs. The PE is at 26. So this company, I think, has the ability to go up to like a 27 or 28 PE. They make these 5-nanometer wafer chips, and look at their market share. We're from 61% to 67. And their chips are in everything, like your car window, your washing machine. And here's the best part. They're printing money. I mean, 13 billion this quarter, 10 billion, 10 billion, 10 billion, and it's up 80%. So this margin expansion's been the real winner here. Crazy 43% net margins on a $1 trillion company, and you get a dividend. It's like Nvidia with the yield, a 1% dividend yield. What's the app you use? Yeah, hey, Owen, Victor, I'm actually on a brokerage right here. I like to keep my stocks in here, my favorite app for analysis. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so it would help out the channel. If you sign up and deposit $100, we'll both get some free stocks. But or you can just type it into Google. It's a brokerage called Moomoo. Anyway, let's keep going here. Let's see. But how do you kickstart your investing journey? Yeah, hey, I have a job. But I had a lot of money saved up before I turned 18 from working too. But yeah, hey, this is if you got, hey, by the way, best way to support me. Yeah, Pedro, he said, let me see your portfolio. Yeah, hey, I got multiple portfolios here. If you want to see my entire stock portfolio, head over to my YouTube channel. I'm fully transparent. I do stock portfolio updates all the time. I'll show you my lifetime return. Like here's my, what's my lifetime return in here? We're up 105% in here, but this portfolio, we're only up like 13% all time in here. Let's see. Again, hey, best way to support me, guys. I sell nothing, by the way. I don't sell nothing. I have no course, no book, Discord, WhatsApp, Telegram. I literally have none of that. Watch out for people impersonating me. I'll never follow you or never DM you. The only thing I do have is a YouTube channel. So if you want to support me, check out my YouTube channel. It's called Nathan Robert. You can just type into YouTube Nathan Robert, or it's in the link tree in my bio. I'm also streaming on YouTube as well. So the best way to support me is just subscribe to the YouTube channel. And if you miss anything, you can watch the stream on the replay. It's available after the stream. You can rewind it. Anyway, let's keep going here. Sorry. All right, so let's see. Someone wanted me to look at EMPD stock. Let's see. Yeah, so a really risky one. Only a $460 million market cap. So a $400 million company, stocks at an all-time low. Let's see. They're losing millions a quarter. So yeah, look at this revenue. I mean, it's basically a revenue-less company. The revenue was $700,000, down 30% from the previous year. So I wouldn't buy that company probably. It may be a fun swing trade, but I wouldn't really trust that one to just buy and hold forever. So yeah. Um yeah, no problem, John. Used to work at McDonald's actually. McDonald's is one of my favorite companies, man. Check this out. McDonald's is really a real estate royalty company. If you go spend $100 at any McDonald's, $4 of that goes back to the parent company as a high margin royalty. The original McDonald's founders are like, we can't build an empire just making 5 cents off every burger we sell. We got to collect royalties. We got to own the land under the stores. So McDonald's has a huge $50 billion real estate portfolio. They own the land under 80% of the stores, and they always have tenants that pay above market rates. So anyway, McDonald's is such an interesting stock. They're known as recession resilient as well. So if we go into a recession, McDonald's sales actually go up. And in a recession, McDonald's actually acquired a bunch of cheap land. They're just really cool. Hey, thanks for following the YouTube. Yo, I'm going to give you a follow back. Yo, thanks so much. I'm trying to build up my YouTube channel, trying to get more followers and viewers on there. So yeah, that's the best way to support me. Just subscribe to my YouTube channel and watch the stream from there. But yeah, let's keep going. Hey, good morning. Yeah, happy Sunday, everyone. Why would you own so much Coca-Cola that doesn't even beat the index? Hey, so I actually don't own Coca-Cola. I actually own, if you look right here, this is a different ticker symbol. This is Coca-Cola Consolidated. This is the bottling company for Coca-Cola, and they've had some pretty monster returns. So this is a different stock. It's a little confusing. Like Coca-Cola has like a 3% dividend. Well, this one only has a 0.7% dividend, but look at that payout ratio. That's what I like to see, only a 5% payout ratio. Actually, here's the cool thing about Coca-Cola Consolidated. It's the power of their share buybacks. Look at this. So the net income is up 8% year over year. So net income's up 8%, but the EPS is up 16%. That's the buybacks. That's the power of the buybacks. They've bought back like 8% of the company. So Sodi said TMUS. Someone said, do I read the TikTok chat? Yeah, I read the TikTok chat and the YouTube chat. So here's T-Mobile, and I do own this one. So let me show you my position and then be transparent here. Yeah, I got 5 shares of T-Mobile stock. That blue line is my cost basis average there. So yeah, T-Mobile is just, I think, going to be a winner in the long run. Check this out. The PE is a 23, so a pretty fair PE. They just acquired some fiber company. But anyway, check this out. The best part about this company is the margin expansion. So if you look at their net margins right here, this used to be a tough business. Back in 2022, they had single digit margins. Look at that, 3% net margins. But now the margin expansion, ever since they won that lawsuit against AT&T, T-Mobile gets access to all of AT&T's bands, which just for free, which is crazy. So anyway, this margin expansion has been nuts. And what is T-Mobile doing with $3 billion in net income every quarter? You might be wondering, because that's a lot of money. $3.2 billion in net income in the most recent quarter. What are they doing with all that? Well, they're returning it all to you as a shareholder via buybacks. They spent $3 billion or $2.5 billion this quarter buying back their own stock. $2.5 billion the quarter before, $5 billion. And here's the power of those buybacks. Again, net income's up 10%. But your return as a shareholder up 14%. That's the net income per share. There's less shares that exist. So that's what's so cool about T-Mobile. All right, let's see. They bought MetroNet. That could be true too. They bought some fiber company, like literally within the past week. All right, let's see. What do you think about JEPI? So this is a covered call ETF. So basically you buy this to maximize your dividend income. Notice the S&P 500 is at an all-time high when this one isn't at an all-time high. That's just because you're buying this to maximize your dividend income. Look at that. You get an 8.6% dividend yield. Do notice the dividend does trickle down every year a little bit, but just because of the nature of selling calls. But this won't outperform the market in the long run, but it's good to have a nice monthly dividend there. Yeah, it's good for a Roth. You're right, because you get that because they pay short-term capital gains when they pay their dividends. Yo, hey, Mark. Mark, you got to give me a ticker symbol, dude. I don't know what that is. Yeah. If y'all got any stocks I'm gonna look at, yeah, give me the ticker symbol. Don't give me the name of the company. Find it better. Unless it's a really popular one like Apple. I think I could find that one, but I've never heard of that weird company. So here's Dutch Bros stock, BROS. This one had some good earnings. Oh wait, Dutch Bros. No, he said Warner Bros. Bro, okay, WBD. So Warner Bros. Discovery. Dang, they were down 8% on Friday. So let's go see what the earnings report was. So They missed on revenue slightly. They beat on net income, but this had to be some one-time adjustment. Yeah, it was. So they did not actually make 1.5 billion in net income. I wonder what that one-time adjustment came from. They really lost 79 mil of revenue. Anyway, Warner Bros. Discovery, I don't know. It was genius for AT&T to spin them off, because ever since the spinoff, AT&T is like soared up. But I don't know here. What are the sales? Are the sales growing? I think it's just like sales are up 1% year over year. They own Global Linear Networks, which, is kind of a dying business. Yeah. Studio streaming. How's the streaming business doing? Hey, that's up 9% year over year. Yeah, they own that one streaming service. I forget the name of it. Oh, well. The real winner has been Netflix and kind of Disney. But keep up the great work. Can you look at Wolf? Hey, yeah, of course. But unfortunately, if we judge this stock from a financial... Oh, no, I'm thinking of WOOF. Okay, this is actually a Bitcoin mining company, I believe. Let me double check you on that. So, yeah, here's where the revenue comes from. Digital currency mining. So, I believe this company just owns a bunch of Bitcoin. Let's see, are they making net income? So, no. Negative 61 mil. I guess that might be normal for this kind of stock. I don't know. But basically, I think this is kind of just a crypto proxy. They just mine Bitcoin. They're kind of like a Bitcoin mining company, I believe. So, yeah. What app is this? Yeah, hey, I'm actually on a brokerage right here if you want to get this software I'm on. Linktree in bio, very first link there. It's my favorite app to do analysis. I keep my stocks in here as well. Yeah, hey, try not to spam there. Oh, hold on. Sorry. I got to mute this guy. But, yeah, I try to see all the stocks here. Don't spam it a million times. I'll try to get to it. So, yeah, let's see here. Coinbase stock. Hey, yeah, let's do Coinbase. That's a cool one. We can look at Figma, too. I would like to invest with you. Hey, Wonder, I don't really have any way to do that. Yeah, by the way, watch out for people impersonating me. I don't sell anything. I have no course, book, Discord, WhatsApp, Telegram. I'll never follow you or anyone. So here, can you show us a stock you really like under $15? Hey, the thing is, share price is irrelevant because you can buy fractional shares. So unless you don't mind having like the psychological less than one share, it doesn't really matter because you can buy fractional shares. So at that point, it's just like, what's a company you really like, There's a lot of companies I like right now. Progressive Corp, T-Mobile. Here, I'll show you what I've been buying the most recently. It should show me. See, Progressive Corp, PSIX, T-Mobile. Those are my most recent buys. Coca-Cola Consolidated. I bought another share of them last week. Amazon's a cool one. I really like Amazon. Great buy and hold forever company. So innovative. But let me get back to Coinbase right here. Let me go to actually Kathy Wood's portfolio. If anyone know who Kathy Woods is, she's like the ARKK ETF holder. Wow, look at that. Robinhood is now her second largest holding. It's been a monster performer. But then there's Coinbase. This is still a huge position for her. Oh yeah, there was some news that like an executive order, you can now hold crypto in your Roth IRA. Pretty crazy. Maybe that'll benefit Coinbase, but Coinbase doesn't have any Roth IRAs, so I don't know. But anyway, look at this. Here's a really cool stat we get. This is the monthly transacting users. So not just like monthly active users, but transacting users is up from 8.2 mil to 8.7 mil. So really nice growth on their monthly active users. The reason the stock fell is because normally they make a couple hundred mil of operating profit every quarter. It actually went negative. So I do wonder what happened there. So the revenue is only up 3% year over year as well. I think investors wanted a little bit more growth. So they missed on EBITDA. Like look at the EBITDA. They're expecting 372 and they only they lost 25 mil. So I think that's why Coinbase, despite Bitcoin doing so good and Coinbase normally follows Bitcoin, they missed on those financial metrics. That's what's kind of cool about Bitcoin though. Like Bitcoin can't miss on net income. Bitcoin doesn't report earnings. It's kind of like a cool, unique feature about it. I just realized we can see your cursor. Yeah, hey, unfortunately, I thought you could on the TikTok stream. I'm using my cursor to point out stuff, and I always thought people on the TikTok stream could see it, but I just learned yesterday they can't. Only the YouTube stream can. So yeah, if y'all want to see like where I'm pointing with my cursor, check out the YouTube stream. My YouTube channel is called Nathan Robert. It's in the link tree in my bio. All right, so let's keep going here. Meta. Oh, hey, dude, I love Meta stock. This is one of the largest companies in the world, Mag 7, of course. And here's the crazy part. Meta, with Instagram, Facebook, WhatsApp, Threads, and all that, has 3.48 billion daily active users. I mean, that's half the world. That's almost unbelievable. But the margin expansion growth on Meta has been incredible. Revenue's up 21, but net income's up 36% because we go to their net margins. This is crazy. It's a $2 trillion company with 40% net margins. I mean, they're just printing money. I love it. And they're also a buyback company. Look at the EPS, net income per share is up 38.3 when net income's only up 36. So yeah, they've bought back 2% of all the shares in the past year. They also have a dividend, it's small, a 0.3% dividend, but they're mainly returning money to you via buybacks and acquiring businesses. Threads is nearing the same amount of daily active users as X. They're just now introducing ads to WhatsApp, which is going to be a huge earnings tailwind. Yo, what up? Tyler said SINT stock. Syntax Technology. So yeah, we don't really cover these kind of stocks on here. If you look in the top right, see the market cap? It's only 7.8 million. So, yeah, we won't really even cover that one. Yeah. All right. So, yeah, that's a crazy daily user count. And it's almost, hard to believe. Because, this is the thing. All their Meta apps aren't available in China. So, China's a huge chunk of the world. So, you basically have like 60 to 80% of the entire world, excluding China, on a Meta app. I don't know if that's true, but anyway, I don't want to. Okay, so someone said Salesforce, Google. Oh, remind me to look at Google. I want to look at them later. But let me look at Salesforce right here. This is your huge customer relations company. They own Slack, which is a great asset to own. And all software has just been struggling recently. Like you look at Adobe or ServiceNow or some of these other just service companies, they've kind of been struggling. Same with Salesforce. I think investors are a little disappointed with the slowing growth here. First off, I love how diversified that they are. Like, check this out. They're in services, sales, platform, integration and analytics, marketing and commerce. So I love how diversified that they are. But look at this net income year over year. Net income is only up 0.5%. So only up 0.5% year over year, not great. And the free cash flow is only up 3%. So, just barely beating inflation there. I think investors wanted a little bit more growth there. But still, I do like Salesforce. I think they're going to be a winner in the long run. Their software is like essential for some companies, like literally essential. So I know they're doing some buybacks as well. Let me see if that's really gone into effect. So net income's only up 0.5. But let's see, is EPS up more? Yeah, so EPS is up 1.92. Let's see how much buybacks that they're doing. Why not? Here's the buybacks. Yeah, they spent 2.6 billion the most recent quarter on stock buybacks, 1.3 bill, 4 bill, and they have a dividend now too. What happened with the company on your portfolio that's red? Well, hey, there's Perion Network. I have a lot of red positions. I'm not sure which one you're talking about there. I just like being fully transparent. I'll show you every stock I own, how much I'm up and down on them. Let's see. You think it's good to invest in Baba? Let's check out that one. Warner Movie Group is the WDB. Are 401k and Roth IRA the same? No, 401k is like from an employer. A Roth IRA is one like anyone can open if you are under a certain amount of income. All right, so here's Alibaba. This is like the Chinese Amazon. And did you buy DCTH? I did, but again, I only have 13 shares of this company, and it's worth $130. So not much, but I do like that company. Anyway, here's Alibaba. So this company is the Chinese Amazon. Look at this PE. The PE is a 16, so that's a pretty fair PE, but again, it's Chinese, so that's a normal multiple. But this net income is crazy. I mean, they're making billions in net income every quarter. Kind of averaged out here. They're making like 3 bill of net income plus a quarter. And they have a nice dividend of 0.9, a nearly 1% dividend yield there. So yeah, they own AliExpress. Pretty cool. Graco said, is BMNR still a buy? So Bitmine Immersion Technology. So this is that Ethereum staking Ethereum company that Tom Lee is on. Ever since Tom Lee started working for the company, the stock is up over 1,000%, which is nuts. But the thing is, This is basically like it's MicroStrategy, but for Ethereum. So it kind of just moves with whatever Ethereum does. So yeah, look at that. Revenue from self-mining, that's the Ethereum. Revenues from the sale of the assets. Anyway, so yeah, basically they're a Ethereum company that just owns a bunch of Ethereum. And you basically just look at the market cap. It should just be a proxy with Ethereum. It should trade off their Ethereum value. Why buy fractional shares of Tesla when the upside is smaller if you owned a lot of shares? No, the upside's the same. It's all percentage, man. If you put $15 in Apple and $15 in $15 in a fractional share of Apple, and then you buy a one whole share of Paragon Network, they both go up 15%. You make the same amount of money. So it's all just relative to how much you put in, right? But let's see. He says he likes Webull stock. Yeah, hey, you know what? I use Webull. Oh yeah, we'll do Google after this. Yeah, thanks for reminding me. We got to look at Google and AMD. We got to get all these companies. So anyway, here's Webull right here. That is literally just this app right here, publicly traded. So oopsie, I've probably given them a lot of trading fees before. So yeah, here's their stock. They just IPO'd couple months ago, so there's not too much data. But what we can see is the two most recent quarters, they made net income, both of those quarters. So this is a net income positive company, which is great. The revenue grew 31% year over year. So, it's pretty good, actually. I like that they're making net income. So I don't know what the valuation is. The valuation might be a little high. I mean, 11 the end goal is they'll kind of trade like a Robinhood one day. Like they'll move with Bitcoin and stuff. Okay, so let's look at Google right here. I do own Google, so here I'll show you my Google position as well. It's in my Robinhood portfolio. So yeah, I got 19 shares of Google. They've actually been like a secret, like really good performer. Like look at them the past couple months here. I mean, it's like slowly Nike swooshed up. I mean, look at that Nike swoosh. I almost want to screenshot that. All right, so here's the Nike swoosh recovery on Google. They're at nearly an all-time high. All-time high is 207. They're at 202. Pretty close to all-time highs. But look at this valuation. Google still trades at a 21.5 times PE, which is net income. And I feel like they have the ability to stretch up to like a 24, 23 PE, hit a new all-time high before they really start to, maybe trail down a little bit. But this net income is ridiculous. They're making, a bunch of net income, like 20 to 30 bill in net income a quarter. The margins are growing faster, than the revenue. So their net income's growing faster than revenue, so margins are growing. But basically, Google's so innovative. They literally own Android. They own YouTube. They have the Google Cloud business. They just acquired Wiz for $30 billion, one of the main cybersecurity companies. They're in quantum chips. They own Waymo. Google's just like an ETF in one. And what is Google doing with, look at this. They made $28 billion the most recent quarter. So what is Google doing with $28 billion of net income every quarter? Well, first off, their small dividend only costs $2.5 billion. So it's under 10% dividend payout ratio. But look at this buybacks that they're actually doing. This is why Google's such a shareholder-friendly company. They're literally spending like 13 to 15 billion of net income every quarter solely buying back their own stock. So again, net income is up 19, but you as a shareholder, your return via earnings per share is up 22% year over year. So that's the power of the buybacks. Google, it's like the perfect just buy and hold forever company, kind of like Apple and Microsoft. Just buy and hold those companies forever. Did you hear about Palo Alto buying CyberArk? Let's check that one out. PANW. So actually, let me go to Nancy Pelosi's portfolio. So Nancy Pelosi, we'll look at CRDO too. So one of the stocks she owns is PANW. This is Palo Alto Network. It's like the largest cybersecurity stock out there. And here's the best part about this company is the subscription business. Literally over half their revenue comes from their subscription revenue. And I love subscription model companies because, it's all reoccurring revenue whenever someone like signs up for your subscription. But look at this. It literally just hits a new record every quarter. Look at these year-over-year growth rates in the middle. I mean, if you look at this on an annual basis, it just hits a new record every year. So that's what I love about PANW, Palo Alto Network. We look at the free cash flow. They're making, close to $3 billion of free cash flow a year, a couple $100 million net income every quarter. So Palo Alto Network is just a really cool company in the cybersecurity industry. So what is CRDO? I don't know. Let's check it out. Is that or Credo Technology? So yeah, actually, this stock is on my watch list. I remember this one now. And look, they're at an all-time high. So let's go look at the financials because it usually explains why a stock is at all-time highs. So let's see revenue right here. Revenue, yeah. Look at the growth here. I mean, revenue went from 60 mil to 170 million. So a very nice jump up on revenue. And on that, they made net income. 36 mil in net income this quarter, 30 mil last quarter. So now they're going to be making net income every quarter, and they have a monster of a balance sheet. I mean, look at this. No debt at all on this company. Let's see how much cash they have. 430 million of cash on hand. So yeah, I can see why this one's at all-time highs right now. You know, incredible sales growth, making net income on it, no debt, lots of cash. Pretty cool. Um, let's see. Do you think it's time to sell Palantir? I think Palantir might be worth a trim. I definitely want to sell out of the whole position. I definitely wouldn't be buying at this valuation. Here's the thing: I'd love to buy. I'd love to have some exposure to Palantir, but just not at this valuation. I mean, the price to sales is 130. Here's what I love about them, though. Here's why they probably deserve the high valuation. Half the revenue comes from the government. So many police stations using their software. This government revenue is up 49% year over year. Incredible growth on the government revenue and the commercial revenue. Commercial revenue is up 46% year over year. So both businesses are growing like crazy, and they had their first ever $1 billion revenue quarter. So they made $1 billion of revenue, and on that billion, they made 330 mil of net income. So incredible net margins, 32% net margin. Again, debt-free company with $6 billion of cash. Wow, incredible. And look, actually, you're putting all their cash in these short-term investments. What this is like the 1 to 3 week treasury. So they're actually earning a lot of interest. So they keep their cash instead of, having to earn no interest. They put it in, they just buy actual treasury bonds, but they buy the 1 to 3 week treasury bonds. So they get their money back. It's basically buying BIL, this ETF. This is the 1 to 3 week treasury bond ETF. All right. All right. What do you think of Supermicro Computer? The thing is, I was disappointed with Supermicro Computer's earnings. I do own them, and I'm still up a good chunk on them. Here, I'll show you that. But not one. I don't know if I didn't have a position. I don't know if I'd be looking into buy at this valuation. So here's my position. I got 10 shares. I'm still up, 71% on them. We bought them during the whole accounting fraud shenanigans. Like, look, they didn't report earnings. They were supposed to report earnings this day. Like, it was a crazy day because I remember watching it. They just didn't report earnings this day, and the market freaked out. Like, there's some SEC problems, but then everything ended up being okay. But anyway, here's the bad news about Supermicro Computer that I don't love. Like, look at this revenue. So revenue is up 7.5%. So revenue's up 7, but net income is down by 34. So again, that means their margins are collapsing. They're giving like customers bulk deals that are hurting their margin. Rephrasing, good afternoon. Hey, what up, man? What up, Mo? I hope y'all are having a good Sunday. I have one for you, CLSK. Is that CleanSpark? I think this is another Bitcoin mining company. Yeah, so this is CleanSpark. So unfortunately, yeah, this company just mines Bitcoin. But look, Bitcoin's at an all-time high when this one is nowhere near its all-time high. So what I've just found is like the Bitcoin mining companies just underperform actual Bitcoin. Yeah, look at this. 100% of the revenue just comes from their Bitcoin mining. You want to go to the balance sheet for these companies because they're usually really good because of all the just Bitcoin that they own. But again, I would just be careful. I'd probably rather just own real Bitcoin than this one, to be honest. All right. Let's see here. Reddit stock. Hey, yo, I love. Oh, Tempest AI. Yo, we'll look at Reddit first, then Tempest AI. Remind me to look at that one. Oh, we can look at the QQQ as well. Here's why Reddit. A lot of people think this is a meme company, but this is no meme, and I might be biased because I do own them. I'm up like over double on them now, which is great news. Yeah, we only have 4 shares. Again, with some of these risky companies, you don't want to have a huge chunk of your portfolio in them. But here's what I absolutely love about Reddit and why they deserve to be doing this good. First off, forget the name Reddit. Let's judge them for their financials. And look, after the revenue grew 53% from the previous year, the revenue grew another 77%. I mean, even I didn't expect that. So the revenue growth is nuts. They made 90 million of, after-tax net income this quarter, and the balance sheet is a fortress. They literally have no debt at all. This is a completely debt-free company with over $2 billion of cash right now. So the cash flow as well is just crazy good. So Reddit's one that I own. I don't know if I'd buy them over $200, but, or wait, is it 100 or 200? Yeah, $200 now. Geez. Yeah, I wouldn't buy them over 200, but I do really like them. So what was that other company I wanted to look at? Oh, Tempest AI. Yeah, so this is a company bought by Nancy Pelosi and her husband, and I think it might be worth looking into because the earnings were really good. So, or let me see. So they beat on revenue, they beat on net income, and they beat on EBIT. So they triple beat on every metric. And check this out. Here's where the revenue comes from, the genomics, and look at how fast this is growing. I mean, the revenue's up 88% from the previous year. That's really good growth. So genomics is growing like crazy. Same with the data and services business. That one is up 44% year over year. So both main businesses are growing like crazy on Tempest AI, but they're still struggling to get net income positive. They're not making money yet, but the trend is definitely getting better, you know. But again, this growth makes it okay. 90% year over year revenue growth. Yeah, my battery is low. Hey, by the way, I'm going to be doing a stream later tonight at exactly 8 o'clock, which is in exactly 7 hours from now. So if you want to hit the follow button, by the way, we're going to be doing another live stream later tonight at 8 o'clock if you want to hit the follow button. Yo, no way, Josh, for a bunch of roses. Thank you so much, Josh, for the 11 roses and 10 Greeka. Thanks so much. I really appreciate all the gifts there. If you guys got any stocks you want me to look at, let me know. I'll check them out for you. Oh, Josh, here we go. Josh said UAVS stock. Yeah, thanks for the roses again. So this is AG Eagle Aerial Systems. So like a pretty small one. You know, we don't usually like to cover these kind of stocks. Like if you look in the top right there, the market cap, they're only a $68 million company. So the whole entire market cap is 68 million. But oh, hey, check that out. They sell drones. Drones are 61% of the business. And look, it's up 94% year over year. Not much revenue though. I mean, look, the revenue was 3.6 million, down 6% year over year. They only lost $1 million, which is good. But I'd still be careful just because the market cap is so tiny. But you know what? I do like the drone industry, So hey, it's like a small cap drone play. Don't sleep on Oracle. Ooh. Oh wait, I saw Nvidia earlier. I wanted to get to Nvidia stock. Hey, what up, World Free? How's it going? What up, Cole? What up, Mo? Hope y'all are having a good Sunday. We'll look at BMNR. Oh, and AMD. Yeah, we got to look at AMD and SoFi. Alman, what's up, dude? We'll look at SoFi after this. Yeah. So here's Nvidia stock. Obviously, we all have heard of Nvidia before. They have a huge GPU market share. Like, check this out. They literally have a 20% PC GPU market share, up from 18%. They also have this automotive software. Those Lucid cars that Uber just bought 1.25 billion worth of cars from Lucid are powered by NVIDIA's automotive software, autonomous driving software. So kind of like a coming for Tesla a little or something. But the best part here is honestly just the bottom line, the net income. I mean, they're printing, 20 bill nearly plus a net income every quarter. So this net income is just ridiculous. So NVIDIA is just a winner, man. Fortress of a balance sheet as well. Really good cash flow growth. So yeah, hey, let's check. Thanks again, Tengrica. We'll check out UNP. This is Union Pacific, and I love this industry. This is the railroad industry. And, you can't really get any new railroads down. So they basically have a shared oligopoly with all the other railroads. There's no real competition for them. They own certain areas. And check this out. You're mainly buying them for the dividend and stock buybacks. So look at that. You get a 2.5% dividend yield on Union Pacific, which is pretty cool. The PE is a 19, pretty fair PE. And basically, they just print money. Look at this. Whenever there's supply chain issues, they also benefit. But they're making like 1.8 billion in net income every quarter. Let's go see how much the cash flow is even better, actually. But remember, they made 1.8 bill of net income this quarter. Let's see how much the dividend cost. Well, first off, look, since they have so much leftover money, they're spending so much on buybacks. 1 bill this quarter, 1.7 bill last quarter, and the dividend only cost 795 million. And look, if you notice, the cost of the dividend went down. It used to be 815. How did it go to 7.95? Well, it's because of the buybacks. Whenever a company buys back their own stock, they don't have to pay a dividend to those share anymore, making the cost of the dividend go down since there's less shares that exist. Here's another way you can see the power of the buybacks. Look at this net income. It's up 12% year over year. So net income's up 12, but your return via shareholder is up 15% because of the buybacks. Anyway, that's Union Pacific. Where was this one? Oh yeah, SoFi Technologies. This is my favorite fintech stock. They deserve to be doing this good. I'm actually shocked they're not, closer to $25 right now. Because check this out, SoFi is so growthy. For wondering what this is a fintech right here. They're a bank. They have their own banking charter, which are like impossible to get. But look at this financial services business. This has been the real winner, and this is why they deserve the high valuation, because they have high growth. The revenue of the fintech revenue, financial services, is literally doubled, up 101% year over year. So incredible growth on the financial services and the lending business with the student loan forgiveness, cancellation, whatever. That's supposed to be booming as well. And also, people are really starting to take this company serious. SoFi made $100 million in net income just this quarter. They're making net income every single quarter. So this is a profitable company that a lot of people like. And I own them, so I might be biased, but what app is this? Yeah, hey, Bailey, I'm actually on a brokerage right here. I love keeping my stocks in here, doing analysis on here. So yeah, if you want to get this brokerage that I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and deposit $100, we'll both get 5 free stocks. Or you can just type it into Google. It's a brokerage called Moomoo. But anyway, here's AMD, Advanced Micro Devices. I do own this one as well. And we kind of just looked at NVIDIA, so this kind of looks similar to NVIDIA. But again, another huge market share, 17% PC GPU market share. But they're really growing their data center business because, data centers need GPUs. And, well, this is why it's genius for AMD to get into the data center business. They make GPUs, They can get the newest models themselves because they make them and at the cheapest price. So that's what I love. Also, the free cash flow and net income have exploded. That's a record, $1.7 billion of free cash flow this quarter. The net income was $880 million, up 2x. They have another really good balance sheet. No net debt on this company. So AMD is one I do own. So I might be biased, but I own them because I liked them. Archer should be going off Monday or Tuesday due to big demand. Private aircraft. So yeah, Archer Aviation, here's the thing. We can look at this one really quickly. I'd be careful with this one because they report earnings on Monday. So first off, they report earnings Monday, so that'll probably move the stock. But just know, this is still a startup. Like, this company, has never sold anything. If we go to the revenue right here, it says no data because Archer Aviation has never sold anything. They've never sold a product or a service. It's a revenue-less startup. And this is also the bad news. They're losing over $100 million of net income every quarter. So they can afford it, though. They have a really good balance sheet because they've been able to issue shares and get money from Stellantis because Stellantis owns 9.5%. ARK owns 5%, but again, it's tough for me to buy a revenue-less company. Let's see, our analysts expecting I guess in 2 quarters, they're expecting $2 million of revenue, but I don't know about that one. I got to do more research on them. Thoughts on INOD dropping data? Yeah, we are, I'll pull them up again. I'll be quick because we already covered this one. But Innodata, this is one I do own as well. I'm just holding on to my shares. Nothing has really changed here. They're doing everything that I expected them to. Revenue's doubled. It's up 99% year over year. They kept profitable. I mean, look at this net income right here. They've made net income every single quarter. So that's great news. The balance sheet continues to deleverage, which is great. So everything is trending in the right direction here on Innodata. I think investors are a little disappointed with the somewhat slowing growth. I think investors had slightly higher expectations, but everything looks good to me there. Again, with that kind of stock, you don't want to have a huge position in them. Just like a fun, my position. How big is it? I just got 9 shares in my Roth IRA. Here's my 9 shares of Innodata. All right, so let's see. Can you look up any stock? Try CMS Energy. CMS Energy, let's try it out. So let's see. This stock is pretty close to an all-time high. I'm guessing they're a utility, like a regulated utility. You get a 2.8% dividend on the company. That's pretty cool. So yeah, look at that. Electric utility and a gas utility. So if we go to the net income, yeah, they're making $200 to $300 million of net income every quarter. Pretty cool. So, remind me to look at Apple. I'm looking at Apple next, but I wanted to go over UPS. Prosecutos said UPS stock. Here's why I think this one might be a dividend trap, and I'll teach you kind of how to do this for yourself. So if we look at this company's yield right here, they have a 7.5% dividend. That's a really high yield. Here's how we can tell if it's sustainable or not. So all you got to do is go to the net income and check this out. They made 1.28, or we'll just round it up. They made 1.3 billion of net income this quarter. So remember that number. They made 1.3 billion of net income. And look at this. The dividend cost every quarter, 1.35 billion. So they need to make at very least 1.35 billion for them to even afford the dividend. So I think there might be a chance of a dividend cut here if things don't change quickly. Like all their net income, more than 100% is being just eaten up by the dividend. They have no leftover money. So it's tough. I can see why that one's kind of struggling right now. What happens is, hey, Caden, I'm on a brokerage right here. Buy stocks in here. So if you want to get this app I'm on, it's in the link tree in my bio. The very first link there. It's my favorite app to do analysis. It's lowest fee brokerage, in my opinion. Best free tools. With Robinhood, you got to pay like $5 a month. There is none of that here. Anyway, here's Apple. They've had a pretty good return. Look at that. They were a $200 stock. Now they're $231 in just 3 days. So really good return recently. That's because Tim Cook met up with Trump at the White House, said they're going to invest $100 billion in the U.S. Another kind of weird thing is Tim Cook gifted Donald Trump a golden statue of himself. So that was a little weird. But anyway, check this out. Here's what I love about Apple. They have a huge smartphone market share, obviously, 19% smartphone market share. And look at this. iPhone is half their revenue. So obviously, iPhone's half the revenue, but the services business is the main winner here, bringing the most to their bottom line. And if you go spend any amount of money in the App Store, you go spend $100 on some Clash of Clans gems, $30 of that goes back to Apple as a royalty. So they collect these super high margin, services fees, and it's nearly $100 billion of annual revenue for them. So then they have the Mac sales, the wearables like the AirPods, the watches, and the iPads. So here's also why Apple's a little bit affected by tariffs. Like if we look and see where the revenue comes from, like did you know only 36% of Apple's revenue comes from the US, then 25% comes from Europe, 17% just from China. So that's why they are a bit affected by tariffs. But check this out. Apple makes a boatload of money, like $25 billion plus in net income every quarter. And what does Apple do with all the net income? Well, they actually have the largest buyback program of any company on earth. They literally spend close to $25 billion every quarter buying back their own stock. Like that's more than some market caps they own. Like 25 billion, like they could acquire a company for 20 billion, but instead they choose to do share buybacks. So that's why if we go to the net income year over year, net income is up 9%, but your return as a shareholder through net income per share is up 12% because there's less shares that exist. So pretty cool. Yeah, hey, invested 09. Let's do it, man. He said Spotify stock. Spotify is another one I really like. Oh yeah, hey, Republic. We'll look at Palantir after this. So here is Spotify. This company is done great, pretty close to all-time high. And they're just really profitable now. So check this out. We can see their monthly active users. How much do they have? 696 million monthly active users, and 433 million of those are ad supported. And here's their premium subscribers, though. 276 million premium subscribers. Premium is 90% of the revenue. Then the ad supported. But check this out. Let's go to the FCF, which stands for free cash flow. Look at this free cash flow. I mean, it's up 56% year over year, 830 mil of free cash flow this quarter. They did lose some net income, but here's how we can tell if that was real. We go to the operating profit, and yep, that was a little one-time adjustment that they had because the operating profit was right in line with what it should be. That's up 67%. So there was a little weird thing to the net income, but it was a one-time thing, so don't worry about it. They've also deleveraged their balance sheet. I mean, mainly just from growing the assets. I mean, look at this. Liabilities used to be 58% of the assets. Now it's only 50. So pretty cool company there. Wow, Tencent owns a lot of them. Tencent is the second largest shareholder of Spotify and the largest shareholder of Snapchat. What happens? Yeah, hey, Kirby, I'm on a brokerage and app on here called Moomoo. It's in the link tree in my bio, very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. But the link tree in my bio, the first link there is also an affiliate link if you want to sign up for this app. If you go and deposit $100, we'll both get 5 free stocks. So yeah, let's go check out Palantir right here. We got to look at QQQ after this. Yo, what up, JR? And Ali, what's up, guys? Hope y'all are having a good Sunday. Yeah, we'll look at CECO. Try not to spam. We'll get to all the stocks here. Don't worry. And we'll look at NU. So check this out, Palantir. Here's why people love this one. Half the revenue comes from the government. So many police stations are using the Palantir software, and this business is up 49% year over year. So the business is booming on the government business and on the commercial side. That one's up 46% year over year. So both businesses are growing like crazy. They made 500 mil of free cash flow this quarter, 330 mil in net income. Look at this margin. So the revenue was exactly $1 billion, up 48%. And they made 330 mil of net income on that. So 33% net margin and an absolute fortress of a balance sheet. Again, no debt at all and $6 billion of cash, up from $4 billion. So Palantir, I wish I owned that one, but the thing is their valuation is just a little too high for me. So someone said QQQ. I actually recommend you should buy the QQQM. It's the exact same ETF with the exact same NASDAQ 100 strategy, but with a lower expense ratio. So if you just buy QQQ for the long run, you should hold this one instead and you'll save on yearly fees. Literally exact same strategy, exact same everything. They just don't market this ETF because they don't want you to know about it. So that's a cool little life hack there. All right, let's see here. CECO stock. What's this one? So Cameco Environmental. This one's done very well. Look at this one. Well, a $1.5 billion market cap, but they've had some pretty monster performance, all-time high. So let's see if we can figure out why. So engineered systems segment, industrial process solutions, 10% of the revenue comes from the Netherlands. Well, let's see. Are they profitable? Or what did they report versus the analyst expectations? So they beat on revenue, they beat on net income, and they beat on EBIT by like a 50% beat. So they really did beat on every metric. Revenue grew 34, net income grew 104. They're growing their margins. So yeah, they're making net income every quarter. This is a profitable company. Uh-oh. Okay, we're good. Sorry. So yeah, that one, I can see why they're doing so good. They had a huge beat from the analyst expectations. What is this one? BINI stock. What is this one? BINI. Oh, look at Fubo too. So here's Bollinger Innovations. Why does the chart look so weird? They must have had a split here, reverse split. Yeah. So anyway, what's the market cap? So, okay, we're not even going to cover this company. So look, if you look in the top right there, the market cap, the whole company is worth 2.9 million. So, I mean, I don't even touch that one. If the whole company's worth 2 million, it's tough. So here's Fubo. This is the company that's all owned by, or 70% is just owned and controlled by Disney now. So it's kind of just in the hands of Disney. I think the upside's limited. Like the best this could, I think, do is go back to this like $5.50 buyout price from Disney. And Disney already owns the shares. Disney already paid them their money. Check this out. That's what this huge inflow of net income was, their payment from Disney. So honestly, I don't see too much like value in Fubo. You could juice another little, like maybe 20-30% there. But my side of the bet is I just own Disney shares. I got 15 shares of Disney, so that's my side of the bet. But Fubo, they're that streaming service. I wonder how their earnings were. Actually, let me, if we judge Fubo for their financials, all right, let's see here. Oh yeah, NU stock. Wait, if Fubo loads. Okay, yeah, Fubo. Let me see what the earnings were real quick. Revenue. So revenue fell year over year. So revenue fell 2.8% year over year, and they actually they really narrowed their losses. They only lost 6 million. So, it's interesting. So let's see. NU. So this is a crypto bank out of Brazil. This is such a fascinating stock, in my opinion. So if you're looking for a crypto bank, this one is probably the top pick. But they're also in Brazil. But that's also good news because down there in South America and Brazil, Mexico, Colombia, Cayman Islands, that's where the currency sucks down there. So that's where crypto is like literally the most popular. So that's kind of where you want to be if you're a crypto bank. I don't know how well that'd do in the US right now, but they're printing money. I mean, look at this. They're making 500 million just the most recent quarter, up 57%. Like these are crazy year-over-year growth rates. They made 2 billion in net income just in 2024. So Warren Buffett and Berkshire Hathaway also are a shareholder of this company. So I found that interesting. Warren Buffett said he'll never buy Bitcoin, but he'll buy a Bitcoin bank, or maybe it was someone on his team. I don't know. So yeah, that's actually a pretty cool name. I love their financials. They're super profitable. So Rivian stock, hey, that's a huge kind of Tesla competitor that has a huge partnership with Amazon. Has anyone seen like those electric Amazon delivery trucks? Well, those are made by Rivian, and Amazon's the largest shareholder, right? So yeah, look at that. Amazon owns 13% of all the shares, and Porsche owns 12% of all the shares. So there's only one thing I would be careful with down here, and these are the net income losses. I mean, look at that. They still lost 1.1 billion in net income this quarter, 500 mil last quarter, 700 mil. So these net income losses are really why it's tough to buy this one individually. Like technically I have some exposure to Rivian through my Amazon shares, but again, it's tough. It's tough. What is Solid Power? Yeah, hey, Red Cat. Yo, give me the ticker symbol for these stocks and I'll check them out for you. I don't know what those are. MSTR. Hey, yeah, hey, what up, Big Mike? So this is, they changed their name to Strategy. So this is Strategy. So basically, they just dilute the shareholder. They issue shares to raise cash, and then with that cash, they just buy Bitcoin. And the only thing you really want to look at for this company is the balance sheet. I mean, look at this. How does the balance sheet go from 7 billion of assets to 64 billion? Well, they diluted the shareholder by like $15 billion, rose $15 billion of cash, bought 15 billion of Bitcoin with it, and the Bitcoin has had some nice appreciation. And they just recently bought some more Bitcoin. So basically, it's just like a Bitcoin holding company and should just perform kind of rhyme with whatever Bitcoin's price is. Maybe it'll move more. Like I've seen, like when Bitcoin goes up 1%, sometimes MicroStrategy will go up like 2%. Have you looked at Hood? I have not looked at Hood today, but they're actually my best performing stock of all time. I regret selling every share I've ever sold, but this is Robinhood stock. Here's the thing. I sold Robinhood stock when Bitcoin hit 100K because Robinhood makes so much money, most of their net income from crypto transaction fees that they trade with crypto, but Bitcoin's only up 15% since that 100K sell, but Robinhood is more than doubled. So I kind of got bit there, but still, Robinhood's a great company. I do own them. I own the shares and I have a brokerage with them. So I do give them some transaction fees. But yeah, Robinhood is so innovative. You won't believe this. They're making nearly the same amount of money as Interactive Brokers. So the revenue is up 45%. So first off, really growthy. So they made 990 mil of revenue. So out of the 990 million of revenue, 390 million of that was net income, was profit. So they have incredible margins right now, 40% net margin. The Robinhood Gold subscription is making them a lot of money. Hey, I'm a gold member, so I give them, with Robinhood, here's my application. I pay them $5 a month. So anyway, that's kind of why I like Moomoo a lot. You don't have to pay $5 a month with this app right here. And with this one right here, you still get a 4.10% APY on your idle cash. Anyway, let's look at this one. So SoundHound AI. This is a company NVIDIA used to own. Actually, on this day right here, NVIDIA sold out of SoundHound AI. But they just had some really good earnings. If you're into this stock right here, there's only one thing you want to watch for SoundHound AI, and that's the subscription service. Because check this out. This is 85% of the revenue, but look at the growth. I mean, it's literally up 585% from the previous year. With this growth rate, what's it going to be this time next year? A year ago, it was nothing, 600,000 of revenue, nothing. But 25 mil, that's really significant. And look at this. Analysts were expecting 32 million of revenue. Well, they made 42 million, so they had a nice beat. They're still losing money every quarter. I would still be careful a bit, but still, the growth is why investors like that one. What about Evelyn? What's up? He said Neo. Yeah, this is a Chinese company. SMIC. Do you mean SMCI? All right, yeah, we can check that one out, eh? So here's Neo. This is kind of like a Rivian. I just don't buy these kind of stocks just because of the industry and the valuations. It's a low margin business, like selling cars. I mean, Tesla's a bit different, but anyway, we're going to switch their currency to US dollars from Chinese, and it still doesn't look any better because here's Neo. They lost 930 million this quarter. 970 million. So they're losing close to $1 billion every quarter of net income. and the whole company is worth $10.8 billion. So, there might be some real chance of bankruptcy, and that's why I think the stock is close to all-time lows right now. I mean, they're just losing a boatload of money. They need to fix that trend. So SMIC, yeah, I can't find SMIC stock, so I looked that one up. Can't find that one, unfortunately. All right, so what is this one? AUPH. It sounds like a small cap, but we'll check it out. So, a $1.5 billion market cap, not too small. Let's see. So, do they sell anything? They do. Yeah, look at that. Revenue's up 22% year over year. They did 70 million of revenue, and on that 70 mil of revenue, 21 million was net income. So that's really good margin, 31% net margin in the most recent quarter. Let's hope they keep that up. Yeah, that's real as well. So the profits have exploded on this company. Good balance sheet. Hey, actually, this one's not too bad. Most companies like this don't make net income, but this one's making quite a bit of net income. What was that last stock you covered? I missed it since I got a call. Yeah, hey, good thing about the YouTube stream is you can actually rewind it. I forget, I think it was Soundhound AI or Robinhood. I forget what the last stock we looked at was. But yeah. Yeah, by the way, best way to support me is subscribe to my YouTube channel. I'm streaming on there as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. If you miss anything, you can replay it. And when the stream's over, you'll be able to replay it as well. And that's the best way to support me. I'm really just trying to build up my YouTube channel. By the way, guys, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I'll never DM you or follow you. Anyway, let's keep going here, though. Yo, Luffy, what's up, dude? He said, thoughts on FUTU stock. That is one of my favorite companies. So, yeah, I do have 8 shares of them. They're starting to make a lot of money that they're even paying out special dividends. So, if you're wondering, hey, what is FUTU stock? Well, it's actually this app that I've been using this whole time. This is Moomoo. So literally this software I'm using right now, it's this software, this brokerage publicly traded. And we can see some stats about them, like their users. This app has 26 million number of users. Client assets are at 106 bill. Yeah, so they make brokerage commissions. How's that doing? Yeah, up 115% year over year. And also interest income. That's what's cool, you earn cash and they make some cash as well. So it's cool to see that the app I'm using is making a lot of money, even if they weren't, you're still FDIC insured for $250K, but yeah, this company's printing money and they just started doing those special dividends. So yeah, that's FUTU stock. And if you want to get this software I'm on, by the way, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so we'll both get 5 free stocks. Yo, Maximus, no way, dude. Thanks so much for the roses. You gave me 6 roses. He said, can we look at Corweave? Heck yeah, dude. Let's do it. So here's NVIDIA's portfolio. NVIDIA's portfolio, where are they? So yeah, CoreWeave is their largest holding. So first off, NVIDIA owns I think it's 8% of CoreWeave. So NVIDIA owns a lot of shares of this one. They just IPO'd, so we don't really have too much data. But here's the one piece of data that we get that I do like. Look at this. The year-over-year revenue growth is up 420%. So the revenue literally went from 188 million to 980 million in a year. So they're super growthy. That's what I think people really like about CoreWeave. They also just acquired CoreZ, which will give them some Bitcoin exposure. But yeah. Is it true that Bank of America had to borrow $200 billion to keep the lights on? I don't think so. But I could be. I mean, hey, if we go to Warren Buffett's portfolio, probably in 2008 or something maybe, but Bank of America is doing great right now. Look at the dividend. You get a 2.3% dividend with Bank of America. Yeah, they're in consumer banking, wealth management. But look at this net income. This is kind of the good news about Bank of America. They're literally making $7 billion of net income every single quarter, and they mainly just spend it on dividends and buybacks. So look, net income is up 3%, but EPS, net income per share, is up 7% because there's less shares that exist. Pretty cool. Can I use this analysis info without investing on the move? You can see some of them, C-View. Yeah, the only thing you can, I think, do is click on company and you can see all this stuff. But yeah, you should be able to. Yes, sir. Let's see. Trade Desk stock, is it a good buy? Let's look at it. TTD. So this is the Trade Desk. This is that advertising stock. Unfortunately, they reported earnings and fell 39%. And even after that 39% dip, I think it was just coming to a somewhat reasonable valuation. Like the PE is still a 65, pretty high, but it's high because they gave high single digit growth, like maybe 9% growth the next year. So I think that was the bad guidance. They gave 9% growth, so it made the multiple collapse. But look at this, they're making net income every quarter, a lot of it. Actually, the margins just fell because look, the total revenue grew by 19, but the net income only grew by 6. So that does mean the margins did fall a bit, but and it's worth looking into. They're a cool advertising company. They did just lose also Netflix as a partner. You know, Netflix used to use the trade desk to find advertisers, but now they just do it themselves. Um, let's see here. Powell Industries. Yeah, I love Powell Industries. Yeah, I need to charge my phone here. You're right. What happened to GoDaddy stock? Yeah, hey, that they reported earnings. That's kind of what happened. Yeah, look at that. Stock fell 11% on Friday. Let's see. They beat on revenue, they beat on net income, and they beat on EBITDA, but the stock fell anyway. Again, that's kind of what you see for a lot of companies right now, but it's the guidance that hurts the stock. They had bad guidance. Wait, is that the bamboo? Or hey, no, I got we're talking about this one right here. All the apps I'm using or all these brokerages are all in the link tree in my bio. This one right here that I'm on right now is the very first link there, if that's what you're talking about. Yeah, I gotta get a 100-foot charger. So Mo said OXY stock. That's one also owned by Warren Buffett. So when you go to Warren Buffett's portfolio right here, one of his main oil stocks is actually an OXY, Occidental Petroleum. And let's see how they're doing. So realized price, net sales volume per day. It's kind of cool we get these stats here. But anyway, yeah, 80% of the revenue comes from oil and gas. Then the chemical business. What's the net income here? So yeah, the net income is down 60% year over year, or 40% really. It's mainly just because the price of oil is, that's the same thing with Chevron and Exxon. They're also feeling the same pain. But anyway, yeah, Berkshire Hathaway's largest shareholder. They own 27% of all the shares there. So that's interesting. I think they have like a 2% plus dividend as well. Hey, thanks, Angies. Hope you're having a good Sunday. Hope everyone's having a good Sunday. What's Nancy Pelosi trading? Here's her portfolio. We can see, these super investors have to make all their trades public by SEC law, so we can see exactly what moves she's been making and her exact portfolio holdings. Like her largest holding is in Apple, Amazon, Google. There's a reason that these super investors love big tech like Apple, Amazon, Google, NVIDIA, Netflix, CrowdStrike. These are all great, like just never sell companies. What website? Yeah, hey, sorry. Yeah, hey, this is a brokerage. Again, Christopher Power. If you want to get this app I'm on, it's actually a software, a brokerage. It's in the link tree in my bio. It's the very first link there. It's where I like to keep I buy my stocks in here. And it's also an affiliate link too. So if you go and deposit $100, we'll both get some free stocks. Or you can just type in Google, Moomoo. It's a brokerage called Moomoo. But anyway, yeah, link tree in bio, first link. Anyway, let's keep going here. I love analyzing stocks in here. Like someone said, can we analyze IBM? Yeah, let's do it. So IBM stock. Oh, and SoFi. We'll look at SoFi too. So IBM, they've ever since earnings have kind of been struggling. So let me go see what the earnings were. One thing I do like about IBM is the dividend yield that you get. So check this out. Right now they have a 2.8% dividend yield. The payout ratio says 103. It's not actually that high. They had a little one-time adjustment this quarter. Look, the net income went negative that quarter. It wasn't actually negative. They really made over $2 billion. But basically, they're a really profitable company, making nearly 2 to 3 billion in net income every quarter. And they're in quantum. Wait, aren't they in consulting? Yeah, so software, then consulting, and then infrastructure. So I like how they're very diversified. They're in 3 main segments of business there. And we can also see, look at that. Oh, only 40% of their revenue comes from the US. I didn't know that. I thought it was more. Anyway, so even though they're headquartered in the US, you get a lot of international exposure. Pretty cool. SoFi Technology. So yeah, this is one I love, man. I do own some SoFi, and so I might be biased, but here's why I love them. They have their own banking charter. They're a fintech. Look at this financial services growth specifically. It's up 101% year over year. That is incredible growth on the financial services. And, they're also making net income every quarter. So this is why people are really starting to take SoFi serious. It like, dang it, I gotta switch to quarterly again. But basically, they made over 100 million of net income this quarter, which is pretty cool. Is crypto and stock on this side? Yeah, you can get crypto and stocks on here. Yeah, you can. Yeah, they got Bitcoin on here as well, or all the different all the coins. Anyway, I personally don't own any crypto though, but I kind of regret that because Bitcoin's been doing freaking amazing. So someone said Dow Chemical Company. I feel bad. Show me your position so I can find it. You said you own it. Wait, what stock was I talking about that I own, German? I probably the stock. I don't know which one I was talking about there, but if I said I owned it, I probably own it in this portfolio right here. So check this out. These are all the stocks that I own in here. We got some big losers as well. Just signed up with your referral. Hey, yo, thank you so much, Big Mike. Yo, I'm gonna give you a follow. Thanks for that. I do appreciate that. We'll both. Hey, if you sign up with my referral link, we'll both actually get 5 free stocks. So that's thank you. Anyway, here's Dow though. This is a company I'd be careful with because of the dividend risk. So first off, most people look at this and they're like, "Oh my goodness, a 13% dividend yield. That looks great. I get 13% of my money back just in cash a year." But look at the stock price. It's at an all-time low. So you've definitely lost more than 13% of stock price. So here's the only concerning thing. I think this has a real chance of a dividend cut because check this out. To pay a dividend, you have to be making profits. If we zoom out on this company right here, look at this. They used to be making like over $1 billion of net income a quarter. Then they started to struggle, and now they've lost 800 mil this quarter, 300 mil last quarter. So it's just a tough buy right now because of these huge losses. They literally can't afford the dividend. It's tough. So yeah, this is a chemical company. You get exposure to specialty plastics, industrial intermediates. So yeah, that's the Dow Chemical Company. Unfortunately, it's just those net income numbers that are scaring me. They can't really afford the dividend. Let's see here. Oh yeah, FCEL. Sorry, man, I forgot to get to that one. So this is Fuel Cell Energy. Oh hey, you know what? You remember how I said we get 5 free stocks? This is one I actually got. And I sold it. I downloaded the app like this day on May 30th, 2023. Anyway, wow. So this stock is at an all-time low. Wow. So look at this. They're a $97 million market cap. So kind of remember that number right there. The whole company is worth $97 million, and they lost $37 million just this quarter. So when we just think about this logically here, you're buying, like you could buy the whole company at this valuation pretty much. You're buying into a company at a valuation of $97 million. You're buying a business that loses $37 million of net income a quarter. So that's why the stock's at all-time lows right now. There's real bankruptcy risk here. Kind of reminds me of a ChargePoint. So yeah, hey, I can't believe that. Hey, the stock was $60 it was reverse split. Never mind. Anyway, that it said May 2023. I think that's right when I made my portfolio. Yeah, look at that. Oh my goodness, it's not going away. At the very kind of bottom left, May 30th, 2023 is the day I started this account. So pretty cool. How are we doing year to date? Year to date, we're up 41%. This is just one of my portfolios. This is my best performing, but I have some other worser performing. But it's mainly thanks to Comfort Systems right here. This has been an absolute monster performer. Same with Amphenol Group. This is a company that's been supplying NVIDIA with copper. NVIDIA's new NVLink spine product uses Amphenol's copper cables. So that's cool. Anything NVIDIA adjacent is just rallying right now. Yeah, hey Seth, if you want to get this app, it should be in the description. But if I don't even know if you can view the description on the YouTube stream, but it's in the link tree in my bio there, the very first link there. How about the Neo stock? Yeah, unfortunately, Neo, this one as well, just loses a bunch of net income and is diluting you while the stock's at all-time lows. So that's kind of why this one's been struggling. I mean, good. Well, think about this one logically too. So the whole company's worth, we'll round it up. The whole company's worth $11 billion. So you're buying an $11 billion company. The business is losing like nearly $1 billion a quarter. I mean, look at this. They lost 930 mil this quarter, 980 mil last quarter, 700 mil. The trend isn't exactly getting better. The balance sheet looks awful. I mean, compared to what it used to, they used to have more assets than liabilities. Now they have more liabilities than assets thanks to these net income losses. Whenever you take this huge net income loss, it has to come from somewhere, and usually off the balance sheet, unless they issue shares. And let's see, they have no way. Is that real? Hold on. Yeah, they okay. Anyway, I would be careful with Neo. They're Chinese as well, so they just lose a lot of money. Hey, try not to spam there. Hey, yo, I didn't even see that. Yeah, try not to spam. I need some moderators in here. Super Microcomputer, Coinbase. We'll look at Coinbase stock, and we'll get to Super Micro. Don't worry. I'll be quick about this one. This is a Kathy Wood stock. So if we go to Kathy Wood's portfolio right here, her fourth largest holding is actually Coinbase. But they actually had some bad earnings, and usually this stock trades with Bitcoin, usually rhymes with Bitcoin, the price does. But the earnings kind of underwhelmed investors. Here's one good stat we do get. This is a cool metric. This is their monthly transacting users. So not just monthly active users, but monthly transacting users is 8.7 mil, up from 8.2 million the same time last year. Also, there's a new order where people in their Roth IRA can hold crypto itself. You could already own IBIT, but not Bitcoin itself. But look at this. Here's what investors didn't love. This EBIT lost 24 mil. They were expecting 300 mil. That was actually a significant miss. We can kind of see that as well in the operating profit. Usually they make a couple hundred mil a quarter. They lost money this quarter. So and the growth, it did slow. Like revenue only up 3% year over year. I think for those three reasons is, oh my goodness. Sorry, I keep hitting the mic there. Hopefully that wasn't loud. But for all those reasons, I think that's why Coinbase stock fell. Okay, what was this other one? Oh yeah, super microcomputer. What up, Evan? So there's some bad news about this stock, and I really wouldn't look to be adding. I own this stock, and I'm not looking to add to my position yet. I mean, I'd realistically like to see this one go back to this gap around the $38 to $40 level before I really add more. Because of this margin collapse, this is the one bad news about super micro. Look, so the revenue's up 7.5%. But the net income is down a big 34% year over year. They're giving customers bulk deals and it's hurting their margins. So yeah, only a 3.4% net margin in the most recent quarter. Let's see, LUMN. Let's check this one out. Lumen Technology. So I believe this one had recently gotten like a huge deal. They gapped down on earnings, but back here, yeah, this company I remember, yeah, they were under $1 stock. Pretty much the stock was going bankrupt. Then they got like a $2 billion order deal from like an S&P 500 company, like some electricity deal. So that's kind of the good news. But oh yeah, look at this. This is not good. So it says they lost 900 million this quarter. 200 million last quarter. So that's rough. And just the business isn't really growing. I mean, look, sales are down 5. So, I mean, they still have sales though, and a lot of them, but yeah, they now have more liabilities and assets. So it's tough. I can kind of see why that one gapped down. I'd like to, it would be better if they didn't just lose 900 million, which technically was a one-time adjustment, but that's still a loss. I mean, technically they made money, the operating profit, but it did also fall 80%. So this 80% loss is probably the real reason the stock fell. On top of this, the organic decline of the business. How much do you need to start investing? Hey, like less than $100, right? Yeah, heck yeah. I started with I remember I put in like $50 in Robinhood. No way, dude. I wish I could pronounce your name. But hey, shout out this guy right here on the YouTube stream. Just had a super chat. Thank you so much. I don't even know what currency that is, but he said, "What do you think of ZIM stock?" So this is a shipping company, and they actually have a rule. And here's the cool rule that they have. Whenever they make net income, so whenever they have a net income positive quarter, 50% of that net income is instantly returned to the shareholder through a dividend. So their dividend changes every quarter based off how much net income they make. And check this out, 2022 was crazy. You all remember from the inflation, supply chain logistic issues? This company had benefited like crazy. So they paid $27 in dividends this year. But since then, for the full year 2024, it's $4 for the full year. So because look at this, if you go to the net income right here, if we scroll back to right here, they didn't make net income these quarters. So they actually didn't pay dividends those quarters. But now that they're finally making, now they're finally making a bunch of net income again, they could finally pay a bunch of dividends. So great news, deleveraging balance sheet. Let's see. Yeah, cash from operations is crazy good. So they're interesting. They're basically a nice dividend play. That I don't know if it'll outperform the market in the long run, but yeah, they're interesting. All right, let's see. Are there going to be tears on gold trading? Oh no, PRGO stock. What's this one? PRGO. And by the way, if y'all want to hit the follow button, by the way, I sell nothing. I have no course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. But one thing I do have is a YouTube channel. So if y'all want to hit the subscribe button to my YouTube channel, I'd really appreciate that. I'm streaming on YouTube and TikTok. So if you miss anything, you can replay it on the YouTube stream. But yeah, I just appreciate if you subscribe to my YouTube channel. Watch out for people impersonating me. I sell nothing. But check this out. PGRO stock, unfortunately, is at like an all-time low right now. Look at this huge gap down. I want to find out why that happened. Oh, wait, what I was trying to say is, hey, I do got to go in 5 minutes. So I'm going to end the stream in 5 minutes. But I'm going to be streaming at exactly 8 o'clock. So that's 6 hours from now. So in exactly 6 hours from now, I'm going to be doing another 3 hour stream. So if y'all want to show up to the stream later tonight, it's around 8 o'clock. The market will be open at that time. So stocks will be moving. You know, I'd be showing stocks and stuff, but market's not open. But market will be open at 8 p.m. So if y'all wanted to follow, we'll be live later tonight for that. But here's kind of, I think, why this stock right here has been struggling. It's at an all-time low. First off, they're not growing. So revenue's down 1% year over year. And they're actually getting close to net income positive. So that's the good news, I guess. But I think it's just the lifeblood of the company. The sales are just not growing. Let's see. Did they beat the expectations? So yeah, look at that. They missed on the revenue expectations, missed on the net income. They were expected to make net income this quarter. They didn't. And they missed on EBITDA as well. So they had a triple miss quarter. That might be why the stock's struggling. I just like to see the growth come back there. If tariffs don't pass, we're gonna be in a Great Depression. Yeah, hey, I don't know, Hank. Hey, I'm ready to buy the dip though. I'm ready to buy some stocks at good valuations. So here's Eli Lilly. This company fell from weak results from their weight loss pill. So they had this weight loss injection, but they had a pill version, and the results of that basically like didn't work. So the stock tanked on that. But here's why I'm looking into this one. You know, that's just only 18% of the business. You know, that's Zepbound. Zepbound's only 18% of the business. You know, they have this other huge growth prescription called Mounjaro. The growth is, I almost don't believe it. I mean, they literally created this product in 2022. It was 16 million of revenue. Now it's a 3.9 billion, up 112% year over year. And that's just one little prescription. Also, Zepbound, this is their weight loss prescription. So like Ozempic competitor, they created this in 2023 Q4. It was 175 mil of sales. Now it has 2.3 billion of sales. Basically, they just have a bunch of different prescriptions here. Like, how is this random one? Trulicity. Uh-oh. That one's down 25% year over year. How about Jardiance? That one's up 50. So it's cool. They just have a bunch of little prescriptions here. They just had a most profitable quarter ever as well. You know, 5.66 billion in net income, up 90% year over year. You know, what other S&P 500 companies growing like from 11 billion to 15 billion? So just really growthy company. They're continuing to grow. So I might be looking into starting a position in them. So yeah, you know, we'll look at one last stock here. Great work. Thanks for the effort. Hey, thanks, Eric. I appreciate you, man. You know what? BYD EV stock, that's a Chinese company, but we'll check it out here. So BYD, this is like a huge Tesla competitor. Obviously, we don't see their cars in the US because we have them tariffed. But if we didn't have them tariffed, they'd be all over America because they're cheap and they're pretty good. But check this out. We'll switch their currency to US dollars. They're actually making more net income than Tesla is. So just in the most recent quarter, they made 1.3 billion in net income. Great news. You know, Warren Buffett owns this stock, or Berkshire Hathaway. So think about that. Berkshire Hathaway owns this, and they don't own Tesla. So that's interesting. You get a 1% plus dividend as well with this company. So that's crazy. So yeah, basically Chinese Tesla right here. Chinese Tesla. So yeah. Anyway, that was the stream. I hope you guys have a great rest of your Sunday. I'm going to be live in exactly 6 hours from now. So in exactly 6 hours, we're going to be live looking at more stocks. So yeah, I'll see you guys very soon. Don't forget to hit the follow button if you want. Hit the subscribe button. I'd really appreciate that. Turn on notifications. Thanks again. I wish I could pronounce your name, but thanks again for the little super chat. You know who you are in the chat there. What up? See y'all later, Hank, Eric, Mo, Rachel. I really appreciate all y'all. Seth. Hope you guys have a great rest of your day. See you later. Happy Sunday, for real. All right. And thanks again for y'all on the YouTube stream. You know, I'm trying to build up the YouTube channel, so I really appreciate y'all being here because I get way more viewers on TikTok, but